If the offer is successful, then it's dispersed to the issuer. If it's not, it's returned safely to your hands.
Here's the myth. The myth about equity crowdfunding is that people think it's only for technology companies, which is wrong. As long as these companies are good, we love them.
Said that what we do see as working well is startups are in consumer-facing industries, and this could be as wide as technology, consumer goods, retail, food and beverage, and also real estate as well.
The business actually needs to really prepare themselves in terms of making sure that they have the business plan in place.
Malaysia, as you know, is a very entrepreneurial country and they always need funds. We've been able to fund a whole number of companies that were previously not able to access funds.
So it's really about driving inclusion, and we look at technology or the facilitator for that.
It is my hope that equity crowdfunding can continue to flourish, providing our investors and issuers new ways to actually raise money in a safe and secure manner.
Ladies and gentlemen, welcome back to SC by SC. After lunch, I'm sure you are fully energized for the rest of the program today. As a gentle reminder, kindly ensure your mobile phones are on silent mode or completely switch off to avoid interruptions. And thank you for your cooperation and attention. Like any other tool, Fintech can either create a lot of value for your business or do a lot of damage. You need to know what your business needs are. For those of you who are interested in starting a Fintech startup, you have come to the right place. This session is Slido empowered, so just follow the steps shown on the screen. Remember to put in your questions through Slido. Now, ladies and gentlemen, please join me in welcoming back Eli Broverman, the co-founder of robo-advisor Betterment. And joining him today is Jeffrey Kutenden, the fintech investor and the co-founder of Acorns, a leading financial wellness system. Welcome.
Hello. Nice to see everybody again. Hi, Jeff.
Hi. Nice to see you.
Most of you, I gather, were with us for the morning session, so you probably know me and maybe a little tired of me already. If you weren't there, hello, my name is Eli Broverman. I'm co-founder of Betterment. And Jeff, I don't think the group has gotten a chance to meet you, so why don't you say a few words?
Well, I haven't been around as long as Eli.
Yeah.
We got started a few years later. But yeah, I'm Jeff, co-founder of Acorns, and really excited to come out here. It's my first time to Malaysia as well, and I think today we want to open this up to as many questions as possible. And I think in the beginning, just give some background on our experience building our companies. And I think the theme is it's hard, it takes time, and there's a lot of early mistakes and insights, but you can't really escape from the hard work that is required to build a real sustainable business. And so I think I'm going to take a few steps back and talk a little bit about Acorns, and then we'll share a little bit more on Betterment, and then open it up to some questions. So we started Acorns to make the big decision to invest, a smaller decision. When I was in college, I found that most of my classmates were interested in investing. They wanted to become an investor at some point, but they didn't think it was possible. And at the time, the smartphone was becoming more ubiquitous. This is in 2011, 2012. And increasingly, you could do more on your phone. You could, get car insurance, and you could bank sort of a rudimentary way, but you couldn't really open an investment account. And Schwab and E-Trade, they had investment apps, but they were more for existing customers. And our other goal was to distribute investment accounts like an app and not like traditional financial services. And that required us to create an investment experience that was app appropriate. So we wanted people to open an account in a few minutes using information that's top of mind. And finally, we wanted to reduce that emotional friction associated with making your first investment. And picking an investment is a pretty big decision. And so helping people make that decision initially is important, because if you ask people to select an investment, they're going to tend to think about it. And they're going to tend to maybe call that uncle that's good at stock picking, or talk to a professor or someone else. And before you know it, they've left the onboarding. And next to that, we wanted to help people find the money to invest. And so that's where the spare change really came in, because we wanted to help people find the money to invest, really in the background of life. Now, to do that, we needed to build a platform that could carry really small accounts, that could transfer small amounts of money, and can service many, many thousands and millions of accounts economically. And that ultimately required us to build our own clearing firm. We didn't plan on that initially, but the infrastructure to power Acorns is actually 3 companies. We have a parent technology company, we have a broker-dealer, self-clearing broker-dealer subsidiary, and an affiliated investment advisor that can give the recommendations of what to invest in. We custody the actual accounts at the broker-dealer, and it's really all managed by the parent technology company. So it took us about 2.5 years from initial ideation and incorporation of the business until we launched. And some of the hardest decisions for us were committing to actually building the regulated part of the business. And I really think that having a part of the business that's regulated is actually a big help for startups, because there's very little that's defined initially, and having some rules is actually helpful in terms of getting structure.
Did you look at other options, at some faster paths to building out the brokerage services? And how did you know that none of those were as viable as building your own clearing firm?
We didn't initially, and we didn't want to build a broker-dealer in the very beginning. Fortunately, we did. It ended up being a very valuable part of the business. And in fact, I think that it would be difficult for us to have really innovated if we were handing off the investment accounts and the account opening off to another entity that didn't share our vision. It wouldn't be a great experience for the customers if they were passed through to another entity with a different name. But I think more importantly, if we were to really scale onboarding, it would be difficult to open 10,000 accounts a day with someone else. Just they would have to onboard so many people to handle the compliance side of it that it would be difficult to scale. And scale is the last thing that we focused on, or the last important point, I should say, of the business. Acorns was built to scale. In fact, the business doesn't work without scale. And so to really handle the numbers of trades, to carry the number of accounts that we needed to, we had to build out our own clearing firm to scale, not just on our own proprietary trading platform.
How many of you in the audience have a startup, have a fintech startup, have had a startup in the past? Okay, great. Well, we want to.
More hands are coming up.
Come on.
Slowly.
Anybody? And now raise your hand if you're thinking about a startup. Okay, great. Well, we're going to come to all of you in a few minutes. We want to open this up. I think this is a great opportunity to engage. Let's talk about hiring a little bit.
Okay.
I feel like we spent as much of our time as we could trying to hire, just trying to get some early team members to come on board and to believe in the dream, at least once we had a little capital lined up. And it was hard. Getting those initial team members, the first 5 was a lot harder than the next 20. It's a real leap of faith at that early stage. And we found, particularly for engineers, that was the hardest because engineers have so many options in front of them for where they can go work. And there's a lot of paths that are a lot bumpier than an early stage startup. When we got to a critical mass of engineers, when we had built an engineering culture and we became known as a destination for really great engineers in New York City, it really accelerated the pace of being able to build out the team. I'm curious what the experience was like for Acorns.
Yeah, I mean, it was slow going initially, and I think it's probably a good thing that it's a bit tough in the beginning. I think, hiring, raising money, finding customers, these are very related concepts for a startup. If you're good at convincing other people to join your mission and help you build your company, it's probably likely that you could, raise money for that and hopefully get customers as well. And in the very beginning, the idea may be clear in your head, but communicating that is a bit of a clear when it comes out, and it takes practice. And so, meeting with investors and meeting with, potential team members to bring on board and getting their feedback is excellent in terms of developing, the initial structure for your company, an idea. And part of that's, taking feedback into consideration, getting asked tough questions that you may not know the answer to. And the more you do it, the more, good feedback you get. And I think that, after, initially pitching, many very smart investors and being told no, the presentation changed quite a bit. And, it's almost like the scar tissue from all the no's and feedback is actually what ends up remaining for the startup at a certain point. So accepting that your startup isn't going to be perfect when it begins, but if you can make sure that it can improve, I think puts people and companies in a better position to succeed.
How much money did you raise when you raised your first outside round?
We raised about $2 million or so.
Do you remember what you were targeting to raise? Was it less? Was it more? Was it $2 million?
It was more. I mean, it was. That was more of a friends and family round. I mean, it was outside money. We had been talking to some investors up in Silicon Valley. We weren't really ready for that. Mm-hmm. And the very first money that we raised was just sort of family. It wasn't a lot. And on one hand, when we sort of went through that, it was like, oh my gosh, what do we have to show for this? But we knew what we didn't want to build. And we did have one outside investor at that time. And what we decided after working on it for almost a year was that we really needed to build our own broker-dealer. And that would have added another 18 months and tripled the cost really to build before launch. And it was the right decision. It was a great decision. Our investor was supportive, and we made some more progress towards our FINRA approval, and then we raised our $5.5 million outside round, our big one, and one that was right before launch.
I think that timing and quantifying the right amount to raise is one of the most daunting questions in front of founders at the early stages. It becomes a lot more clear in subsequent rounds. It's sort of, you have a multiplying effect. But when you go out to raise that first capital, I think people are really unclear. Do I want to raise more money? Should I raise less money and try to take on less dilution? And I have a lot of conversations with founders today about that, and there's never a clear answer. But I tend to gravitate towards raising more than you think you ought to, taking capital when it's available. When we set out to raise our first outside round of Betterment, I mentioned earlier, if any of you in the room remember, we bootstrapped for a couple of years. It was a very lean operation. And then we thought we'd raise $1 million. We wound up raising $3 million, and it was very fortunate that we did that. We would have not had enough capital to really prove out the business on $1 million. We thought, well, we'll get $1 million, and then we're going to have all this fabulous traction, and then we'll go back and we'll raise $5 million on a 5x valuation. It wouldn't have worked out that way. If we had raised $1 million, I think the business would have failed.
Yeah.
So de-risking it like that was very important.
Well, I think, you know, you don't have to know how you're going to get there on day one. You know you're going to get there. You have a vision, but, you know, part of the process is discovering how exactly you're going to get there. And in terms of companies that we've built, that meant building, you know, self-carrying broker-dealers, investment advisors, and, you know, designing a, you know, a very, you know, user experience first product. For us, I think that you know, we were lucky that we were able to sort of raise a little bit more after we decided to pivot towards building some more infrastructure. I do think there's a really big difference between, you know, raising a big round when you have product market fit and you're focusing on scaling. And I think experimenting with paying to acquire customers is important. I think a lot of startups out there, you know, they're excited because they can acquire or find a lot of enthusiastic customers without paying for them, which is nice. But if that's all of your data and you want to go raise a big round to acquire customers, it doesn't really make much sense because you don't really have a good grasp of how much it costs to acquire your customers. So I think discipline around paying you know, for customers, acquire growth is important, and some experimentation is actually useful. But also knowing when to time that at an appropriate you know, stage. When you're building the product, it's probably not a ton of help because you're focusing on just making the product work for your customers. But after that, it's more useful.
And ultimately, you've been a very successful capital raiser for Acorns. Why don't you enlighten the crowd, the group?
A lot more
all
successful after we launched.
All the secrets on of how to raise venture capital successfully.
I don't have all the secrets.
Make everybody an expert.
I think I think it's show, don't tell. I think that it's a lot more difficult to communicate your vision if you don't have something to show people. People are busy, they don't have much time, there's a bunch of other things going on. Having a prototype, something that you can put in someone's hands so they can really see it, is helpful. And it's not expensive to build a prototype. Find a way to build it, to make it something. For one, it's good for you to really see your own vision. And I think one of the most powerful things about building a company around a product, I think building a great product is an important aspect to a startup, and then building a great company is how can you sustainably build and support great products. And when you find someone or some people that you can work with that can help make the things that you're thinking of better than you can, it's like a spiritual experience almost. And so the closer you can get to sort of prototyping, designing, if it's a consumer-facing product, really understanding your market, I think it becomes a lot easier to raise money. And also, don't be put off by being told no. It's okay. That's what most people say, and that means hopefully you can get some feedback. And we were told no, 50 times plus, something like 100. I've probably been told no over 100 times. You take the feedback into consideration, and a no now doesn't mean a no later necessarily. So thoughtfulness around taking that feedback into consideration. And sometimes it's not. Sometimes they're wrong, which is okay. So I wouldn't give up if some feedback doesn't seem positive initially. And in fact, if you're onto something and everyone sort of rejects it, that may be a sign that there is an opportunity in that area.
Yeah, I think that point about tenacity is really important, right? I think good investors are looking for that. They're looking for somebody that doesn't take no for an answer. I also think building a relationship with investors, not necessarily expecting something from them tomorrow, but knowing that if you get them close to the story, and then you go execute on what you tell them you're going to do, you're setting yourself up for future financing. That happened to Betterment. We pitched a firm called Menlo Ventures, a very well-known, high-profile.
They told me no.
They told you no. They told me no, but they told me yes the second time. Okay. A lot of folks who I pitched said yes to you. But we pitched them for our A round, and they couldn't get around to it. But they were the ones who ultimately led our B round, and part of it was developing the relationship. I think part of it also is good investors, seasoned venture capitalists. They are used to entrepreneurs promising the sun and the moon and then not delivering. And we actually went out and executed on the projections that we had, and that meant a lot to them.
Yeah, doing what you say you're going to do is one of the most valuable things that you can have or do as an entrepreneur. So if you have modest goals and you meet them or exceed those or reach those, then that's great. A lot of startups talk to sometimes, then they lay out their vision, what they want to accomplish. They say, oh, we'll have a lawyer that'll handle this part, we'll have a designer handle this part, and oh, this part's easy, this part's easy. And it's like, well, if you can't do the easy parts, how do we know that you're going to be able to do the hard parts? Get the easy stuff done. Some of the busy work, get that stuff done. In the early days of a startup, there isn't a ton of work every day. Sometimes it feels like you're just kind of sitting around figuring out, who to call, waiting for people to call back or email back. It's not like go, go, go immediately on day one. And it's okay if it's like that. But as time goes on, making sure that you really respond to certain opportunities. Certain opportunities come up, and you seize those, whether it's opportunity to meet someone or take a connection. Basically, say yes to lots of meetings in the early days because you don't exactly know how you're going to get there, but people that like what you're working on and like your idea, those are probably good people to keep around if they're enthusiastic about what you're working on. And not just like blindly, but if they really believe in it and want to help you, then that's helpful. I've spent a lot of time trying to chase people that weren't crazy about what we're working on. And I think sometimes the entrepreneurial drive, you want to get someone to say yes. That may be tough, and it's not always helpful to convince people that don't exactly love what you're doing.
I love what you said also earlier about showing, not telling. And it goes to something else that I think about with investors, which is, the attention span is extremely short, right? You have very little time to make an impression with investors. And, if any of you have ever used a DocSend or a similar platform to send around a deck to raise capital, you can really see this well using those platforms. I encourage entrepreneurs to use that because you can track how people are engaging with your deck and if they're reading it and what slides they're skipping over and what slides they're spending time on. And what I found, which is so interesting, is if it's a no, it doesn't take very long to get to a no. I mean, it's less than a minute. I usually see somebody spend 30 seconds or 45 seconds on a deck. I mean, that's a no. That's how long you've got their attention for. And then more interesting is if it's a maybe. It's never going to be a yes right away. But if it's a maybe, I might be interested in this. It's still only 3 minutes. That's how long people spend on a deck for an idea that they think is really interesting. So you have to grab a hold of people very quickly.
And I think also when you do your homework, earlier I mentioned sometimes the entrepreneur wants to say, oh, we'll hire a lawyer to figure out the regulatory side of things, or we'll hire an engineer or a CTO to look at the tech side. And in those early days where you have some extra time, read the rules. Read up on tech stacks. Spend that time becoming an expert of sorts. You can do it. It's not impossible. It's just somewhat tedious. And in fact, I think in financial technology, one of the most important things for entrepreneurs is actually to spend time reading the rules, spend time on understanding the regulatory environment to really become an expert, to have a grasp of that. I think it's almost impossible to lead a business in the space if you don't have a firm grasp of that part of the business, because it'll always be nagging at you and potentially, the cart leading the horse to an extent if you don't have confidence on that side of the business. And I think another part is history, making sure you study history, not just history of other startups that may have attempted to build a similar business, but finance has quite a rich history and long history relative to technology. And I think that there are so many technology companies out there, and fintech is, I think, interesting because of the fin part. And diving into that history of finance and looking at a lot of the problems in finance and looking at a lot of the sort of more archaic parts of the industry and parts of businesses is really a good way to come up with ideas and solutions to build using technology today. And at Acorns, when we dove in and ended up tackling the clearing and carrying side of the business, we were able to build better technology. And ultimately, we had frustrations on this proxy processing side of things, which is related to shareholder voting and proxy distribution. And that ended up leading me to co-found another company called SCxSC to build a better solution, initially for Acorns and now for all broker-dealers. And we wouldn't have seen that opportunity if we didn't say, hey, this experience kind of sucks. Why are customers getting these ugly emails? Oh, this is actually related to their rights as shareholders. These are notices about shareholder votes. Oh, voting, that sounds important. This sounds like an actual, potentially an experience for shareholders. I mean, they have the power to vote their shares. Something should exist here. And why have people forgotten this? Oh, well, there used to be stock certificates. Those sort of went away as we streamlined the back office. And shareholder meetings also kind of went away when investors were more distributed across the country. Oh, okay. Well, with that, some of the memory and knowledge around shareholder voting kind of went away. And so I think history is one of the richest sources for inspiration in building startups, and also for potential lessons and insights on what to do when certain problems come up or certain opportunities come up. I think it's very rare that an entirely new problem or unprecedented situation is before us.
I thought it might be interesting. We got a question from the audience on the iPad. I think we're going to switch to maybe handing some mics out or having people come use the microphones. But as we do that, maybe we can get that ready so people can ask questions live. Let's talk about partners for a second. I have some things to say about my partners at Betterment, but you start because,
I co-founded my company with my dad.
Your partner at Acorns, huh?
Yeah, my co-founder. I've known him for a long time, my entire life. So I think I can trust him. And I'm very lucky. My dad's been in the business since he was little, and his dad was in the business, and his dad was in the business. And he talked about capital markets all the time when I was growing up. And he was an investment banker, and if he was raising money for a comic book company or a video game company or candy company, I was more interested in the comics, books, candy, video games. But he would try and connect it to capital markets a little bit. And he's obsessed with history, and would often share a lot of those lessons with me, both about the family and also about finance, which sort of gets more attention when there's a crisis that comes up. People seem to be a lot more reflective on, what's happened before. And then when there isn't a crisis, people seem to think, oh, everything's new. This is unprecedented. And so it was exciting to build a company with someone I've been talking to my whole life about companies, and really one of my best friends. And I think having the right partner is also the right person that can understand. It takes some time to really find your groove in a company, and you're imperfect, and so your partners need to see past your imperfections, push you to be better, and so a lot of mutual respect is essential to be successful.
You had it easy on the trust side of things, because.
But parents can kind of drive you crazy.
It's true.
It doesn't mean they're wrong.
But I think it's it's the most important point of picking a good partner. I actually had two partners to start out at Betterment, but the one who lasted, both of them very, very good, very super trustworthy people. John, who still runs the company as the CEO, I'd known him for, I think, probably 4 years when we decided to go into business together, and he was obviously a very capable person, extremely, one of the most well-rounded intellectual minds that I've been around. But it was the fact that I thought, he was a good person, somebody who was honest to deal with, who would be reliable, that really, I thought, made it a no-brainer to work with him. And having looked back at the last 10 years, I have almost exclusively great relationships with people I've worked with, and there have been a few trying relationships, and I always look back at those and think, you got to check with your gut a little bit on people. It's so important. You got to have the right feeling in your gut. And the other thing I'd say on partnership is, so we had another partner early on, a wonderful guy, and it took us some time, as we've talked about, to get going, and his life was just sort of taking him in a different direction. So he decided to bow out at an early stage. And one of the things that we didn't realize it was so smart at the time, but it turned out to be really smart, is we had a partnership agreement that provided for what was going to happen if somebody left in the early days, and provided a vesting schedule, essentially. And that was so important because we all decided, when we were on the same side of the same team, how we were going to treat that situation. And when he decided to leave, it was very clear what to do, and there was not a second of drama or fighting. It was all predetermined, and so it's something I would encourage people who are forming partnerships. So first of all, I'd say I think having a co-founder is a great way to build a business. I think it's the preferred way to build a business. But I would think about, what happens if somebody wants to bow out. Should we open it up? Do we have some questions from the audience? I'd love to hear from the founders, the aspiring founders, and everybody else in the room. Or do we just have a bunch of, maybe some shy?
Was there an iPad?
There is an iPad, but it's locked.
Oh. Do you want to unlock it?
I think we have a question over here.
Okay.
Hello, my name is Araminta, and I am a Fintech copywriter. So I'm very interested in financial education. Mm-hmm. And one of the big reasons that I love Fintech is because it empowers people to financially educate themselves and to understand how to manage their money. So my question to you is, I already actually typed it out, but I'll just say it again, is do you think it's Fintech's responsibility to financially educate citizens? And how can Fintechs use that to build trust, add value, and just improve people's financial well-being? Thank you.
I'll go first. I don't actually think it is the responsibility of fintech companies. I think that's something that they can elect into. That's your choice.
Their opportunity.
Opportunity is a good way to put it. But I also think, there's different ways of doing this, right? There's something to be said for education and teaching people how to take care of their finances better. There's also something to be said for just doing it for them, right? We need to strike the balance. And I think we talk a lot about financial education, and for good reason. But we also need to work really hard on making things easier, simpler, more accessible. That's important as well.
I think if you can get someone to pay attention, if you have attention on something interesting, which I think fintech generally deals with sort of a more interesting aspect of someone's life. It's something real, right? There's money involved, there's investments involved, there's something sort of greater at stakes. And I think that attention is something precious. And if you can use that attention to make your customers smarter on something, then that's an incredible opportunity. And I think in some cases, when it comes to investments and other things, certainly it's a responsibility to make sure your customers understand what they're signing up for. But what's interesting when it comes to investments for us at Acorns, because we brought the threshold to investing down quite a bit. And we find that customers, even when they make a $5 investment, are more interested to learn about their investments once that's made. And we could spend a lot of time trying to educate customers on the investments before they make that $5 investment, but it's a lot more difficult. And so you have a sort of naturally more engaged customer oftentimes, because telling someone about something they own versus telling someone about something they don't, it's quite different. And so a small investment, in this case, focused on investments, is a small ticket to, an engaged customer and a sort of superpowered learning experience. I remember my first investment. It was a learning experience. I lost all my money, and it wasn't a lot of money, which is a good thing. It's, I think it's good to start small. It's good to start early, and people start looking at things differently when they're, an investor. They have skin in the game, and we actually think at Acorns the paradigm shift for customers that see themselves as investors is probably just as powerful as the money that they can make over the long term if they're investing. If you see yourself as an investor, as future rich, and you learn about how compound interest can work for you, then it's easier to understand how it can maybe work against you. And so, in terms of education, there's so much opportunity, and understanding the special moments when you have a customer's attention and a compelling story, I think is important to really seize that opportunity. Having a page or a section of your site or app where there's just information isn't necessarily helpful. If you're telling your customer something, make sure that it's important. Is it worth their time to read it? People's time, it's very valuable. If you tell them something they already know or that isn't relevant, then you're wasting their time, and they're less likely to pay attention later. And Eli touched on it a little bit earlier. There's a difference between teaching a customer about something they need to do for themselves versus what you're doing for them. And if you have a product that's out there, that's going to be changing over time. If your product is expanding its services, then you're sort of balancing telling your customers and teaching your customers what you're not doing for them, what you are, and it's certainly not trivial.
One other thought on education and writing is, if you are going to go down that path and you're going to invest in it, and we've done a lot of that at Betterment, put resources around it. Hiring good writers, good copywriters, was one of the hardest things for us at Betterment for a long time, and it remains hard to find good copywriters in the space. And so if you find them, then I would draw them in and make use of them, and be aware that if you don't have dedicated resources for that, then that work is going to get distributed to other people on the team who are supposed to have other responsibilities, because everybody can write, some really well and some not as well, but it's something that everybody can pick up and do the work on. And so you have to be careful about that, and make sure that it doesn't become a drain on your resources.
And you have to be really careful about the commitments that you make, promises, forward-looking statements. It's easy for an aggressive marketer to get carried away maybe on sort of on promises of a product. And maybe if they've never worked in fintech or investments or banking, they may need a little bit extra mentorship on that side, because that's one line you can't cross, at least on the investment side, in terms of you can't promise people things that you can't promise, and you can't make them think that something's riskless when it isn't. And if you're only talking about things when they're good, and you don't talk about things when they're bad or when the market's down, you really poorly train your customers for market downturns or bad days or bad months and other things. And so having balance in terms of education, it's not always rainbows and butterflies. When it's up, maybe that's a good chance to explain that, it's not always going to be up every day. And when it's down, explaining to your customers, it's going to be down some days. Maybe if you tell your customers early on when they open an account that your account is working if it is going up and down in value, that means it's working. That's okay. That's a lot easier than telling them when it's up, then one day when it's down, making a big deal about it, and the customer's going to think the product's not working. And so if you have a product that's connected to the market, understanding or helping your customers understand that the product may still be working, even if the market's going up and down, I think is important. It's certainly not easy necessarily.
And it's really important to put thoughtful process around how your content and writing team engages with your product team and your subject matter experts and your legal and compliance teams. Having a tight process around that will make everything work much better.
Eli was all of those in one person at the beginning.
And then when we had to distribute it out, we had some fits and starts, getting everybody to work harmoniously and not having things kind of cycle around for days without making progress. All right, let's see some other questions.
Yeah, hi, Rashidi from KL. Welcome to KL, by the way. I think I've got 1 or 2 questions. Number 1 is, can you give an insight on your culture of innovation, betterment, and accounts? 1. Question number 2, what sort of technology stack that you use in-house? Specifically, what kind of AI, ML technology that you use as part of your innovation?
Well, I think to your first question, which I believe is about sort of a culture of innovation at our companies, I think that the company is birthed on really its values to begin with, and innovation is a part of executing against those values and our mission. So at Acorns, our mission is to guide the financial best interest of the up and coming, beginning with the first step of investing with benevolence and courage. And designing an investment experience for those customers required innovative thinking. We didn't set out to build a new type of broker-dealer and a new type of investment experience. We wanted to guide our customer through the best experience possible to open an investment account. And we wanted them to do it on their phone, using within a few minutes, using information that's top of mind. We wanted them to do it earlier than they would have otherwise. And we want them to do it in the background of life. And so with those constraints, we had to be innovative. And I think that innovation really requires constraints like that. You're given some constraints, some rules, and then you need to find a way to make it work. And turns out, for us to make it work in that situation, we had to be thoughtful about how people funded their accounts, what type of information we needed from them. We didn't want to have them to pull out a check, right? That wouldn't be information that's top of mind. We couldn't have any physical paper because it wouldn't really scale properly. We couldn't have a long sign-up process. We couldn't even ask them to pick the investments initially because it still wouldn't be 2 minutes. We had to really be honest about those constraints. And so I think, starting with your values and mission, and what you want to execute against, and then looking at the constraints in terms of designing that initial experience will require innovation. But I think if you look at innovation first, I think that it's challenging to necessarily apply it effectively. There's lots of interesting technologies out there and interesting things you can make, but if you don't have that encapsulated in a customer-first experience, it can be difficult to, get a grip on it properly.
I think what I'd say is one, make sure that as your team grows, you're communicating on a very regular basis the vision, the mission of the organization, the origin story. So as people come in later, they continue to get infused with that innovative spirit from which the company started. I don't think there's any founders or really early team members who aren't going to come at it with an innovative approach. So it's about how do we make sure that as the team grows, that sense continues. And then I'd say, experiment with your organizational structure and design. Try different approaches to organizing teams, different sizes, cross-functional or single-functional. Try exercises like hackathons. Look for input and feedback from the team. All those things I think can help to keep an organization light on its feet when it comes to innovation.
And it's easier with a smaller number of people. So starting off with too many people can be challenging. So individuals and small groups can think of really interesting things and maybe onto something. We've had hackathons and other things at Acorns, and some of the most interesting ideas have come from individual engineers that have worked over a weekend on an idea. And we think about things individually, so it kind of makes sense that some good ideas will come from individual introspection and reflection.
Sometimes that gives the team an opportunity to work on a pet idea, a pet project that you're just not going to carve out space for in a more organized, long-form roadmap. I've seen. Listen, we've tried it a bunch of ways at my companies, and sometimes it's really successful, and sometimes the team comes back and says, it was fun to do that, but we spent 3 days, and I still got all this other work that I didn't get to. I wish we had that time back.
Yeah, so deadlines are important too.
Yeah. Where else? I think I saw. Let's go over here. And then we'll come back there after.
Okay, it's not meant to grab mics, I thought. Through the journey of the whole entrepreneurships, have you ever thought of giving up? If so, what keeps you going?
Oh, many times. It's very hard, but it's also, if it's something you really believe in, and you don't see another solution out there, then it can be more motivating to get back up and make sure that you can really see it through. It's somewhat easy to build technology. It's difficult to work with people. And so the hard parts about building and scaling the business are really related to how you work with others and making sure people can get along. The quickest way to break an early stage company is people not getting along. That's the number one reason companies fail. And then running out of money is after that. But a lot of companies with a lot of money break. And so, it's normal to doubt yourself. I certainly did many times. And a lot of the things that seem impossible, insurmountable, are really good things to focus on because they are. They're always something that can actually be fixed. It may require time. Usually it requires time, some patience. Spending time on something, even if you make slow progress, you can make progress. And if you have to get some other people to believe in it too, to work with others or raise some more money, that can be done. Take a deep breath, look at the options you have in front of you, and if I look back at all those hugely frustrating moments where I'm like, this is impossible, it was usually right before building the most valuable parts of the business. And it's those moments, those impossible, I want to give up, those are the really special parts of the business because those are the parts where most people do give up. But if you can, resolve to push through that, you may end up building something that's unique and valuable that most people wouldn't have pushed through. And it's very rare to encounter like a truly challenging problem if you break it into small pieces. And so, you know, our building a self-clearing broker-dealer seemed impossible. And no, it took time, and it was very tedious, and thank God we did it. And if we had another way, I probably wouldn't have done it, and the company probably wouldn't be where it is today. So thank God we sort of encountered that moment where I was like, damn it, can we do this? So, good question.
Yeah, I mean, obviously it's a big roller coaster in the early stages of building a company. I do think it smooths out, you know, with some progress and with the, you know, building out the team. You get a little breathing room. I think mental exercises can be really helpful when you hit the low points in the roller coaster, and I think stepping back maybe and thinking about, okay, this is bad, this is not where we want to be, and trying to figure out, what things could happen from here that could be a favorable turn of events. Thinking about those, assessing how realistic they are, and then, if it still feels realistic, you still have conviction that those things can happen to right the ship, then you should keep going. If you with a level head can size up that those things are really unlikely, then you have to reassess. I think this is another reason why it's great to have a co-founder.
Yeah, I agree on the co-founder front, because having someone that can, usually you're not both like that at the same time, but even if you are, it's usually a more reflective experience. But a little anecdote from Acorns too on that. In the early days, we built a very early prototype on PayPal, actually. We wanted to get in touch with PayPal because we thought that PayPal would be a great partner for us. And this is really before we did our first significant round of funding. This is, right after we got started. We couldn't get a hold of PayPal. We called like a customer service center to try and get through to someone. And they kind of took us to the dead end, and they were told we couldn't use the product, and we were misusing it. It was this whole thing. And 3 years later, they led a round of funding, and we got connected with the right people. And that first product, it looked terrible. But our thinking was in the right place, and we didn't give up. And it's okay. There's a lot of stuff that you're going to think like, oh, this is so embarrassing. It's so embarrassing. It's so embarrassing. But that's just how it is. And it's not, no one else is pointing and being like, oh, look at you trying to do things. You're just going to be hard on yourself. So, yeah.
So I think I promised we'd go to the back. Right. Yes, you, sir.
All right. Hi, guys. Thank you very much for sharing with us today. My name is Ahmed. I'm actually from Atlanta, Georgia, so it's nice to see you guys on this side of the water. I've been involved with FinTech for probably the last 4 years. I did my master's in Islamic finance, and I wrote a thesis about crowdfunding for SME development in this part of the world. And at that time, I was kind of like alone because in my university, nobody had ever wrote on that topic. But that's just a little bit of background. 4 years later, I've worked in a FinTech startup, and I got a little experience now doing consulting. And since you're in this part of the world, I wanted to ask you, I'm sure you've probably heard of Islamic finance, right? So I wanted to ask, have you guys considered exploring offering some options within that space? Because I've actually really wanted to use Acorns. I've been telling people about how great the model is and how it opens things up to millennials. But I can't actually use it myself because some of the investments go into things that are what we call not as compliant in terms of Sharia for interest and stuff like that. So have you guys, you're the leaders, and this is like a dream come true to meet you guys. So firstly, have you have thought about this, or are you exploring it, or do you need some help? I'm happy to help you with that. And the second one, I'm a consultant. Second one is more on the experience that I had, working in a startup, which is breaking bad news to people who are investing. So you're dealing with micro investors, and sometimes micro investors are more picky than big investors. So how do you manage the emotions and things when things get a little bit bumpy? You know, if a certain tweet comes out and the market goes crazy, you know, how do you manage breaking news, or do you just, you know, leave things, you don't make news inside of your platforms? Those are my two questions. Thank you very much.
Thank you. Great questions. On the first point, we've been talking about Islamic finance increasingly. I feel like you brought it up to me initially.
Yep,
You're the one
that's
that
right.
that brought up the idea, or not the idea, but that it was something that we should take a closer look at.
There's a session on it today, is there not? Is that right?
And as we've started to look at, you know, the impact of you know, technology and on investing around the world, and as we spent more time overseas, it's come up as well. And I think an interesting thing to think about is, you know, a lot of companies, I think, when they look at expanding around the world, they think of, you know, slapping their logo on something and just growing. And one thing we found is that, you know, when you find really passionate founders and partners, that you tend to find the right partners to expand internationally, and they tend to have their own ideas. And so listening closely is important. So that'd be something really interesting to talk about and learn more about. I know there's a New York startup that I think started in that space, in robo-advising, in sort of a compliant fashion, which is interesting. And I think on the second, what was the second question again? I liked it. I just oh, breaking bad news. Great question. So it's about transparency. You know, in the beginning, if you set expectations properly, then it shouldn't be a shock. It still may be uncomfortable, and I think a customer experiencing discomfort when the market goes down is important. You can't escape that. If you're losing money, it shouldn't necessarily feel good. If your focus is on the long term, of course, it can be seen as a you know, a bearable step on the way. But you know, the first time you have an investment that goes down in value, these are learning opportunities. And if people can really take to heart those learning opportunities, you know, when they're young or when they're growing, when they're building their wealth, instead of just when they have it, then, you know, they'll make smarter investors. And instead of having people that, you know, they invest their nest egg, that's the first time they've invested, the market goes down, they freak out, they sell everything, that's a pretty terrible experience. But if someone is a micro-investor and they're getting started and they experience their first market downturn, and maybe they sell a little bit and they regret it, or maybe they keep investing through it, but if they spend some time on it, they'll see that, oh, okay, markets come back, or if it goes up, you know, markets pull back. They'll actually take away some lessons on, you know, the market and how it moves over time, and hopefully become smarter instead of paying for those lessons sort of when the stakes are much higher.
Yeah, I think it's you know, have that conversation at the start, as Jeff has already said. Right, it's the most important thing. You know, start the dialogue with your customers from the very beginning that they're investing and that there's volatility involved. Yeah. I think we've got time for maybe one, maybe two more.
A quick one. One last question. Open-ended questions. How do you position human to supervise or to manage algorithm or bots or machines in both companies? I mean, in your experience, and this is in relation to Brexit suspension trading from your you know betterment history in 2016. Maybe you can share some points. How do you create that executive decisions to suspend trading from your point of view? I mean, betterment and accounts. Maybe you can share how do you position human capital to supervise bots or machines or algorithm for that matter. You know what I mean?
Okay, so how our sort of investment advice and investment committee complements our automated strategies? Yeah, so it's you know, we automate investing similar to Betterment. And we help people automatically find money to invest. We help automatically rebalance the portfolios. We construct the portfolios. We also have things like found money and other opportunities where, if you're spending with certain retailers, we'll convert, certain cash back rewards into investments. Our goal is to find as much money for you as we can, even your own money for you, and then help you, build wealth over time. So on the investment side, it's really important because we have an investment committee. We were lucky to have a Nobel Prize-winning economist, join early, which really helped us communicate that. And he won his Nobel Prize for modern portfolio theory, which isn't that modern. It's a pretty simple investment strategy around sort of incorporating, uncorrelated assets. And so we've really diversification is the hallmark there. And we diversify across assets using ETFs. And the communication of that to our customers is important because we want our customers to decide, do I invest, not what do I invest in. Doesn't mean our customers aren't going to go pick individual stocks. They may go do that on a separate platform, and we're supportive of that. But I think we really lay out, okay, who's part of this committee to decide the investments, how is this sort of strategy developed, and how is it sort of incorporated and executed using technology. It's pretty simple and straightforward. I think the hard part is how you communicate it to the customers versus how you actually build it out on the technology side. And so we have regular meetings with the investment committee, want to make sure they understand what the technology is doing, and also make sure they understand how we're communicating it to the public. So, for example, if we have portfolios that recommend, say 4.52, percent should be allocated to, small cap stocks in the U.S. Like they would say, hey, don't use 4.52 because you're implying a level of precision that doesn't really exist here for the customers. And things like that. So it's really connected holistically to like what the customers see and how we present it, and not just sort of on the back end and how these systems are designed, if that makes sense.
We honestly don't get asked this question by our customers very much. We do by some regulators. The answer is pretty simple, right? We have a fully automated system. We explain how it works, very transparent about what the trading methodology is, and then we have some breaks on the system. So if there are certain triggers in markets and prices and in trading activity and liquidity, then we'll hit the pause button and let the team kind of weigh in and assess. I think so. We have a minute left. Do we have one last question? Let's go over here.
Hi, my name is Azrul. I have one question though. Lately, we are seeing more and more financial institutions and banks trying their hands in fintech, maybe set up their own, sites, startups or something. So, how do you see this kind of setup working for large institution and banking? Would you recommend? Would you see any pitfall that they might come across, and any advice?
I've not seen it go particularly well for big banks and institutions. I think that there's opportunity there for them. It's very difficult. You have a classic innovator's dilemma. It's just not an environment that is well suited to innovation. I'm not saying it can't be overcome, but it's difficult. I think a partnership approach is much more interesting for banks and large corporations.
And partnerships are perilous for very early stage companies. So before your sort of business is fully formed or even semi-fully formed, it's difficult to strike a partnership with a much larger company. And also you want to make sure you're in charge of your own destiny. And so the company should be a vehicle to build and sustain a great product, and a partnership should do the same.
Okay, right on time. Thank you, everybody. It's been great spending this time with you. Look forward to see you around the rest of the conference.
Thank you, Eli and Jeffrey, for sharing your valuable insights with us. Here is a housekeeping announcement. Please keep your belongings with you at all times. However, if you happen to have lost any of your belongings, you may head towards the reception and check with them whether they have any of your belongings. Thank you. Coming right next in this room, we will have the official launch of Alternative Finance and Regulation Report. So kindly take your seat. We will encourage you to please move forward. Come closer to the stage so that we can allow the crowd to move around later. Thank you for your cooperation. Ladies and gentlemen, it is now time for the official launch of the report. The Regulation of Alternative Finance results of a global survey of regulators. The report presents highlights and insights on global approaches to the regulation of alternative finance, including peer-to-peer lending, equity crowdfunding, and initial coin offerings. For the launch, we will have the Executive Director of Securities Commission Malaysia, Chin Wei Min, to open for us. Following it, there will be a presentation led by Margaret Miller, the lead financial sector economist at the World Bank in the Finance, Competitiveness and Innovation Global Practice, who holds the position of Global Lead for Responsible Financial Access. And after the presentation, Margaret will take some questions from the floor. So if you have any questions that you would like to ask, please note them down and prepare them in advance. With this, please join me in welcoming Wei Min.
Good afternoon, everyone. I guess this is a bit more boring but very, very important part of the session within this FinTech event. I'll try to make it short, but I think we'll probably eagerly await Margaret to give her great speech. So it's a great pleasure to welcome all of you to this official launch of Regulating Alternative Finance, results from a global regulator survey report. Firstly, I think I would like to commend the efforts undertaken by both the World Bank and the Cambridge Center for Alternative Finance, or SCxSC, in conducting the global survey and jointly producing this report, which focuses on peer-to-peer equity crowdfunding and initial coin offerings. The Securities Commission Malaysia was involved in the scoping exercise as well as the preparation of the global survey back in 2017, when the project was first conceptualized, when I was having a chat with Margaret. To the World Bank, we greatly appreciate the partnership that we have forged in relation to this project and look forward to more collaborations in the future. The research presented in this report was funded through the World Bank Global Research and Knowledge Hub in Malaysia. The IOSCO also provided support to the survey by sharing it among our members and encouraged their participations. The report provides empirical data from financial services regulators such as securities regulators like ourselves, capital market authorities, and central banks in more than 110 jurisdictions to understand the current landscape of alternative finance regulations globally. In this regard, 40% of the respondents were from high-income countries, while 30% were from lower income or low-income countries. Focusing on P2P, ECF, and ICOs, the study aimed to comprehensively analyze in a comparative manner how regulators from both developing and developed countries are regulating and supervising these online alternative financial activities. As Dr. Margaret Miller will be sharing with you the key findings of this report shortly after my remarks, we will soon be able to gain more insights on the impact of the differing enabling environments on our industry growth. This, I'm sure, will be of great interest to the wider range of policymakers, development practitioners, researchers, and even private investors involved in alternative finance. While the regulatory framework and approaches are still evolving, I think the survey will serve as a good global baseline on this whole changing landscape. Ladies and gentlemen, the SC recognizes the inclusive potential of FinTech in making our market more accessible to a wide range of its stakeholders, be agile to the emerging trends, and upholding the accountability among our participants. On our agenda for the capital market, which was developed since a couple of years back, one of the key points is about enhancing the access to financing, which I think goes well with this. Recognizing the capital market's role in financing the real economy, the SC places great emphasis on financing needs of MSMEs, given that the MSMEs in Malaysia contribute about 37% of GDP in 2018, and we project it to rise to 50% in our new shared prosperity vision under 2030. This comprises about 98.5% of our total establishment in the country and employ more than 2/3 of our workers in Malaysia. As such, I think enhancing to access to financing through the alternative means is very critical to us. Since 2015, SC has expanded our regulatory framework to support these activities. As of end September this year, ECF and P2P has benefited close to 1,600 micro and SMEs, having raised a total funding of more than 580 million via 6,292 successful campaigns. To illustrate how this can open up opportunity for our small businesses, consider the fact that almost half of our ECF issuers raised 500,000 ringgit or below, while 69% of our P2P financing only needed 50,000 ringgit and below. So there's a small amount which are resulting in a lot of deals to be raised, and as you can see, the help is greatly needed. Furthermore, I think these platforms have attracted many investors, particularly those aged 35 and below. On May 17 this year, the SC announced the registration 5 new P2P financing platforms and 3 new ECF platforms, in addition to our existing operators, taking our total number of registered market operators to 21. We hope that the registration of these new platforms will further broaden the ECF and P2P financing market segment, and thereby driving further financial inclusion by enabling healthy competition while meeting the unmet demands from both the issuers and investors. Just recently, I'm pleased to share that the ECF market have seen its first 2 exits. Scholar Fund, social enterprises on crowdfunding scholarships for university students, which fundraised on the Atta Plus platform in 2017. It has been recently acquired by one of the Asia's biggest donation crowdfunding platforms. Another issuer, MyCash Online, which caters to the needs of unbanked migrants, was also recently acquired after the initial fundraising on Pitch-in. Both of these deals not only provided ECF investors with a decent return on their capital, but also facilitated the growth of businesses with social objectives. Both exits suggest that ECF could be a viable investable asset class for our investors. Following the budget 2019, the Malaysia Co-Investment Fund, or we call it MySIF, with an allocation of 50 million ringgit to co-invest on a 1-to-4 basis. I'm pleased to share that the MySIF is now operational in this year. Furthermore, I think the government has also announced in budget this year a further allocation of 50 million ringgit. One more point to note is recognizing the need to build financially sustainable social enterprises. An additional 10 million ringgit was also allocated to MySIF, specifically for the social enterprises to raise fund via P2P financing. So in this regard, MySIF will co-invest on a 1-to-1 basis at a reasonable financing rate. With all these injections of government fundings, we hope it will further spur the growth of our both ECF and P2P financing platform, which in turn will catalyze further on our micro and SME segments. In closing, I would like to echo some of the words of my chairman in his speech earlier this morning. The SC will continue to advance our digital agenda by building on the foundation that we laid these few years. Our position has always been the facilitative of the digital or alternative finance development, while keeping a watchful eye over the potential sources of risk. The SC believes that having a clear regulatory framework to facilitate financial innovation will provide certainty to our market participants, issuers, as well as investors. It's heartening to note that based on the global survey, Malaysia has been identified as one of the most benchmark jurisdictions globally and sent out as a regional leader, particularly in the equity crowdfunding. With that, I would like to draw my remarks to a close and look forward to the official launch of the report later. Thank you.
Very good. Well, thank you so much, Wei Min. It's really a pleasure to be here today and to be launching this important research here in Kuala Lumpur, where, as you mentioned several years ago, the idea for undertaking something that was really more comprehensive around the legal and regulatory environment for alternative finance was kind of conceived. So this report, when I conclude my remarks, we'll show you how to get access to it, but it's already available online. Would direct you initially to the Cambridge Center for Alternative Finance website to see it, but it'll also be on the World Bank's Open Knowledge Repository. And it was made possible also through support of the Malaysian government, through their contributions to the World Bank Group's Global Knowledge and Research Hub in Malaysia, and with support of our partner in this research, the Cambridge Center for Alternative Finance. So here what we have is I wanted to start out, instead of jumping into the survey and the responses, just take a minute or two to talk about our motivation. You know, why is the World Bank looking at these, you know, kind of some of the edges of fintech and kind of this particular space? And you'll see that just as the regulators have a lot of optimism about the opportunities and the potential for alternative finance, so do we at the World Bank, because as Wei Min was mentioning earlier, we see a lot of need where this could be part of a solution as we go into the future. So in particular, work that's been done by colleagues of mine at the International Finance Corporation, the IFC, has shown, and for those of you taking pictures, the slide deck will also be available afterwards. So if you can also count on that. So research that we've done has indicated that there's an enormous gap in access to finance for SMEs around the world, micro, small, and medium-sized enterprises. And this actually, we believe, sums to more than $5 trillion. And by far, in terms of the different regions of the world, East Asia Pacific has the largest finance gap for micro, small, and medium enterprises. And also some of the largest, you know, just total numbers of over 60 million. So worldwide, 160 million of these firms need finance, but even just in this region, it's more than 60 million. So a huge need there that's not been filled to date. But it's not only firms that need access to finance. As we can see, it's also individuals. And actually, we've been making some good progress globally with providing access to consumers for financial services. The World Bank has financial inclusion as one of our top development priorities. We have something called the Universal Financial Access 2020 corporate goal, where we're working to you know, really close the gap for adults in access to formal financial services. By next year, we're working hard to continue to make progress. But we know, based on data from our Global Findex survey, which is a demand-side or consumer-based survey that's done in more than 140 countries every 3 years, that between 2011 and 2017, approximately 1.2 billion adults entered the financial system and got access to an account. So the red bars are the accounts. You can see, you know, in a lot of regions of the world, this is, you know, 40, 50. In Asia, about 70% of all adults, you know, reporting to this survey say that they have a formal financial account. But it's much, much lower for having savings in formal institutions or borrowing through the formal system. So that means that a lot of people are doing this either through unregulated providers or they're doing it informally. So again, you know, a huge opportunity, a huge need, and we have a lot of research that shows, you know, it's important from a development perspective, which is of course what motivates us at the World Bank, to have access to financial products and services. It has to do with economic growth, which is, you know, like through the enterprise channel, but it also has to do with increasing resilience, reducing poverty, and so it's, you know, we have twin goals of growth and poverty reduction. This is important to achieve both of those. So as Wei Min alluded to earlier, in this survey, we're looking basically at peer-to-peer lending, equity crowdfunding, and initial coin offerings. That's what we're calling alternative finance here. And we see that just as we have, you know, motivations for being interested in this, the regulators that we surveyed, their motivations align with ours. So you'll see between 75 and 85% of the regulators surveyed said that the access to finance for small and medium-sized firms was one of their, you know, was something that they had. They expected that alternative finance had significant potential to help them with that goal. Also, consumer access to finance, there it was a little closer to kind of 70% on average, also thought that alternative finance could be part of a solution for closing gaps in consumer finance. And then we had kind of a broader term of financial inclusion, which many also responded to. One thing, just going back for a minute, one thing also that you'll note is that these ideas were just as strong in lower income countries. And in fact, some of the most optimistic regulators in terms of what alternative finance might bring to them were in jurisdictions such as countries in sub-Saharan Africa, which have, a very significant financing gap. So, we see this not as something that's only for, a certain type of country or a certain income level, but it's really potentially, if done correctly, has applications around the world. Other questions that we asked about were, did they see this affecting, and improving potentially competition? And it's interesting to see that, again, about 2/3 thought that alternative finance could help them with competition. And interestingly, in Latin America and the Caribbean, where you have, more concentrated banking systems in many of the countries, this was something where they saw maybe an opportunity for some contestability, for some, increased competition coming in through new markets and new entrants, such as through alternative finance. Also, job creation was significant. And again, going to Africa, regulators there saw this as an opportunity to increase opportunity to finance for women. So now I'm going to move to the survey part. So now this is the motivation. This is why we think our motivations and our ideas coming from kind of the global perspective are aligning with what we saw in the regulators. So now what did we do to, and this basically follows along the lines of the report. So I hope also, afterwards, maybe some of you get into a little bit more detail through the report. But this is the map we did. We had really, I think, for a first survey, we had an incredible response rate. So we approached, in total, more than 200 jurisdictions, and 111 jurisdictions responded. Now, jurisdictions includes countries and some subnational where there might be instances where there's kind of different regulatory treatment. But this gives you a sense, really, really great coverage, very strong coverage, especially in Latin America. As Wei Min mentioned, the International Organization of Securities Commissions, IOSCO, they were very involved in helping to circulate this survey amongst their members. Then we did follow up also through both the Cambridge Center for Alternative Finance and the World Bank. And these were done through an online portal. In a couple of cases, we had to put the information in ourselves where that was needed, between just April and June of 2019. So these are really very fresh data, very recent. And here it just gives you a little bit more, going from the map to the table. You can see we've got, good coverage across the world. There's some regions, in particular Middle East and North Africa, where we, would like to increase it even more in future iterations. But I think you can see that, quite good coverage across a global set. And I think this is also important, again, with the idea that this is not only a high-income country issue. We had about 40% of our respondents from high-income countries, but 60% from lower income. And that includes 33% from low and low-middle income. This is important because we wanted to understand, as we sent out initially, and the main group of regulators responding were securities commissioners, what were they responsible for? What were in their statutory objectives? And so some of those things were consumer protection, market integrity, financial stability, and then growth of or development of financial markets. But we also think it's important to identify some of the non-statutory objectives that came out strongly. One of those was financial inclusion. So when you add 40% statutory, 51% non-statutory, that's, nearly the whole sample, more than 90%, looking at, making sure there are new opportunities for people who may have been excluded previously. And also supporting competition. Again, 51%, just over half of the sample said that was an important non-statutory objective that they had. Okay, so now this is the first kind of set of slides I'm going to show is kind of a high-level view of what the survey results told us about the status of regulation for alternative finance globally. So here's, we excuse me, we created based on the research and the responses that we got back, we were able to classify as whether or not these activities were regulated in particular jurisdictions. So that doesn't necessarily mean that there was a bespoke regulation. This included where regulators would say we're regulating under existing securities market regulations, for example, in the case of equity crowdfunding, or where they said, we've adapted existing regulations. So there were a variety of kind of situations that we've pulled under regulated. But as you can see, there's more likelihood of regulation and being in a regulated kind of framework in the higher income countries than in the lower income. Especially equity crowdfunding tends to be more likely to be regulated at this point than the peer-to-peer lending. The initial coin offerings, you can see, actually have gone very high. I think that was also just in the last, obviously, couple of years as that activity really took off, and there was concern in different regulatory environments about making sure that some kinds of rules were established. Here's the types I mentioned here, that what was put into those buckets of being regulated. So you can see the peer-to-peer lending is at about 20% of jurisdictions that we surveyed, saying that they had some kind of peer-to-peer lending. The 5% at the bottom there is regulating under a pre-existing framework. The 12%, the middle bar there, is that there's a bespoke regulation, and the last 5% regulated under an existing framework but with adjustments. So this gives you a sense that 12%, 22%, and then 4% are bespoke regulation for these different categories. In the ICO, we have this potentially regulated kind of other there, because ICOs could be potentially considered securities, but if a jurisdiction had a situation where they said, okay, there could be things that are issued under kind of ICO that we would consider a security, we'll call that, an other kind of regulatory treatment. And so that's why we've got this kind of large segment. It's regulators saying, we foresee a situation where we may have something that's comes through the ICO channel that we would have to regulate or would be able to regulate under some of our existing laws and regulations. This is one of the findings that I think is really exciting and interesting. It's about just how quickly the regulatory framework for these activities is likely to change. So we asked regulators, do you think that in the next 2 years, so just 24 months, which for laws and regulations isn't a lot of time, especially for laws, do you expect that the way that you regulate this activity is going to change? And as you can see, for equity crowdfunding, half of the jurisdictions said yes. So that's a tidal wave, like a tsunami of regulatory change in this area. And that's maybe a bit daunting, but I think it represents an enormous opportunity. Because if, as you know, once a law is passed, usually it takes a while if you're going to make modifications, if you realize, you didn't get it quite right, usually that's not going to happen the next day, right? There's a period of time during which, it'll stay in force before there would be reforms or changes. And so, this is an opportunity for kind of and this is some of the benchmarking and other activities that we're going to talk about, for kind of the global community of regulators to try to make sure that these changes reflect best practice, reflect what we know about what's working so far. But even in marketplace lending, P2P, and in initial coin offerings, kind of around 2/3 said either we definitely expect a change or we may be changing. Only about 15%, as you'll see, said no, there's not going to be any change in our regulation. So essentially, you can kind of expect that in most markets, there's going to be some change. And we wanted to know, how do regulators think about, when they're starting to undertake these kinds of changes, what are they going to do in an area and a topic such as alternative finance, which is only a few years old, where there's not an established, kind of code of best practice that's been discussed at the highest levels for years and years, and where you really have to learn by doing in at least part of the time because of also the rapid change in this industry. The triggers of changing laws many times came from them looking at other countries. So, looking at Malaysia, or looking at the UK, or looking at Mexico, or looking at peers, and trying to understand what they were doing. Also from industry requests, and I thought it was quite interesting, the great panel right before me where it was from Crittenden, John, is it John? Jeff, from Acorn mentioned how important a decision it was for their firm to have gone through a regulatory process. So, it's not surprising that we see that through the responses of the regulators, that industry is sometimes asking them for clarity. And then once a process for regulatory change happens, how does that, who are the regulators learning from? How are they, approaching this? You can see that very high figures for analyzing regulatory frameworks of other jurisdictions. So we certainly hope that the report that we're presenting here today is able to, facilitate some of that benchmarking activity that we know regulators are doing anyways with the detailed information that we're providing. Also, consulting with other bodies such as, firms, industry associations, other stakeholders, potentially on the consumer side. Very little on white papers and kind of the traditional, the analog version. So this, I think that the regulatory responses reflect the fast change and kind of a different approach maybe that some regulators are taking now to at least this sector. Something else quite interesting, the platform finance kind of knows no bounds on some level. It's not, it's not physical in the same kind of way necessarily. It doesn't have physical presence like bank networks traditionally have. And what we see is that when when regulators are looking at, who do we get inspiration from, a lot of times it's not just the neighboring jurisdiction. It could be in another region completely. So there's a lot of cross-fertilization, not just country to country within regions, but people really looking at what's going on, outside of of my kind of smaller scope. And as we mentioned, in the East Asia region, Singapore and Malaysia, among the top jurisdictions in terms of where people are getting inspiration, where regulators are getting inspiration for how to move forward on their regulation. The top jurisdiction worldwide was the UK, followed by the US, and then Singapore. So one other item, in the EU, Europe and Central Asia, that's one of the regions where we saw more intra-regional or looking at peers in your same region, probably because of the EU itself and the fact that there's consistent regulatory treatment. So it makes more sense to be looking close by. So just a couple of, I've got many more experts in front of me than I am about Malaysia's experience with regulation, but I just wanted to highlight, some of what gave us, what we, benefited from so much by the partnership with the SC and working with Malaysia on this. Some of these findings on the industry are from the Cambridge Center for Alternative Finance's East Asia report. So between 2013 and 2017, the growth of alternative finance in Malaysia was approximately 125% a year. And of course, the starting points are small volumes, small values, so you have very fast growth at the beginning, but still quite impressive. So the number of firms, and I hope this is up to date, I think as of last spring, so I think it's a few months old, but more than 60 firms have raised money through crowdfunding, and the total volumes raised, the total amount, is larger than some much larger economies such as Japan and Indonesia. It's also really, I think, important to see that it has had a financial inclusion impact because 70% of the beneficiaries of equity crowdfunding here have been either women-owned businesses or businesses owned by youth. And most P2P investors, the findings were that they're under 35 years old. So this is really a dynamic, young, inclusive situation. And I think this last bullet point at the bottom, there's very high satisfaction reported amongst the industry. 80% of the industry that were surveyed said they're satisfied, happy with the regulatory environment here for alternative finance, the highest of any country in East Asia. So what is that experience with alternative finance regulation? Women mentioned in 2015, the regulations were put in place for equity crowdfunding, followed the year after in 2016 for peer-to-peer lending. It's a principles-based regulatory framework, and it's focused on micro, small, and medium-sized enterprises. So actually, consumers here are not able to raise funds on these platforms. That's different than in other jurisdictions where they're, especially peer-to-peer lending is something that's available to consumers. Data on peer-to-peer borrowers can be shared with credit reporting firms. I think this is an important issue. Sometimes, depending on the economy, there may be a well-developed credit bureau. If that data is either not available to the platforms or the platforms aren't sharing that data with that credit reporting system, it weakens the ability of that system to really function properly. And it takes away a source of potentially valuable data to the platforms, which would enable them to ramp up their activities even more quickly and just be more robust. A secondary market operation is allowed here. There are caps on the amount that can be invested per fundraiser and per investor. And something that I very much like to see, because we know based on all of our research at the World Bank Group that women and there continues to be a gender gap in access to finance across just a variety of aspects of the financial services industry. And sometimes this is not only in lower income countries, it can be true also in higher income countries. And one of the ways to really address this is to understand better where those gender gaps are occurring and where progress is being made. And so having a requirement to report sex disaggregated data so that there's awareness of who is on the platforms, who's benefiting, what's the behavior by gender is really important. And here's a bit more information about the experience in the Asia-Pacific region, again, looking at that regulatory breakdown. And in general, kind of some big takeaways. One is that Asia-Pacific is more likely to be regulating these activities than the global, than in the global sample. And it's more likely to be using, countries in Asia-Pacific are more likely to be using some kind of adapted framework from existing regulation, a little bit less likely to be using the bespoke. And what my assumption would be is that means that there's a lot of space still and probably opportunities and likely changes in the future towards more bespoke regimes, which seems to be the trend. Malaysia. The Malaysian flag is on the bar that represents where the regulation would be where the kind of regulation that's in effect here. Okay, so now the aim of regulation. We think this is really important. So overall, kind of the big takeaway is that what regulators are really seeking to do is to make alternative finance something that's fit for purpose for the regular, investor, the so to speak, person in the street who is interested in being involved in some kind of investment activity, and a sustainable source of finance, especially for micro, small, and medium-sized enterprises. So here I've put together the information for peer-to-peer lending and for equity crowdfunding. These are the permissible activities. And what you'll see is that, obviously promotions to individual investors, very important for P2P. It's kind of the whole point of that activity. Fundraising for incorporated entities, and then a couple lines down for individuals. These are the kinds of activities that are allowed under the regulatory framework. So each regulator was asked, which of these things is possible in your jurisdiction? And actually, a takeaway that I have, and these are the most frequently responded to, is that there's still a lot of diversity, because as you can see, 100% say in peer-to-peer lending you can promote to individual investors, which of course is the business model. But then you kind of quickly go to below 60%, allowing some of these different things. So this is again where opportunity to learn across jurisdictions, and potentially as things go into the future, have maybe more consistent treatment across jurisdictions would be important. Now these are the selected regulatory obligations for peer-to-peer lending and for equity crowdfunding, and we've grouped them into a couple of different categories. So this is consumer protection and disclosure. You can see accurate communication, standardized disclosure, complaints handling, all have significant coverage for both types of activity. On a lower level, advertising restrictions, and this, the question asked in particular about social media, those were there about 20 to 30% of the time in terms of the whole sample. Then on due diligence and information sharing, credit checks on borrowers on P2P platforms. It's kind of interesting, I think, that those, there are more than 20% of the platforms where there isn't a credit check. So I think that it would be worthwhile to unpack that and understand a little bit more how are they verifying or getting information, really, if they're, kind of, when they say they don't require a credit check. Eligibility criteria having to be met, verifying the claims of the fundraisers, and then again, sharing the data. As we see here, and one thing that we've worked on a lot at the World Bank Group is credit reporting and sharing of credit information, because it adds to, reduces information asymmetries, increases incentives for borrowers to repay, increases transparency in financial markets. And I think it's kind of, it's an opportunity, at the very least, a missed opportunity that this kind of data sharing hasn't yet become part of the peer-to-peer landscape. But I think there are some challenges there, because banks sometimes own and dominate the credit bureaus or the credit reporting systems in some countries, and if these are non-banks, they wouldn't want to give away, their valuable data in a system where they maybe don't feel like they have an equal seat at the table. But there's opportunity there to make sure that this new channel doesn't kind of reduce transparency or lock people in, because the only entity that has the information that they're a good payment risk is a specific platform. AML and corporate governance were issues that are often part, obviously, of the regulatory obligations. Wind down plans a little bit less frequently. And only a small percent had the requirement, rather, that you have to hold capital proportionate to the investments. So kind of showing part of this spectrum of responses to regulation in this area. Now, in all of those previous ones, you saw that there was essentially a lot of similarity between peer-to-peer lending and equity crowdfunding. Investor protections were the area where you do see a difference. Where, for example, equity crowdfunding here at the bottom, promoting to investors differently based on income or wealth, something that's more frequent, capping the amount that can be invested. And I think this just goes actually to the kind of some of the core difference here, which is that in the crowdfunding space, you're making an equity decision. There's a level of risk that's implied with that's different with the peer-to-peer lending model used by many platforms. For ICOs, there weren't. This is kind of a less heavily regulated, I guess one might say it in that way. I mean, there's a lot of expectation that the buyer beware, that it's up to the investor to be making the decision, that's kind of part of the aspect of this activity. So, not a lot of consistency across jurisdictions in what was required and what were the permissible activities, rather. And in terms of selected regulatory obligations, they really are around, making that, ideally hoping that you are equipping your investor with the information, with disclosure, with some of this basic management, such as separating client and firm assets, so that if they enter into these kinds of opportunities, they will be protected in that way. And I think it's important to note, again, promoting to investors differently based on income. So recognizing that these platforms may be able to reach new kinds of consumers, but that means they may be reaching people who may be less familiar with the risks that they're really taking on, and so trying to mitigate that by having some caps on how much any particular individual could invest. Okay, so that's kind of some of the detailed information across in terms of the rules and regulations. Now we're going to look at the supervision, because what we see happen sometimes in terms of laws and regulations, in general and in finance, which is where I've spent my career working, is that you could have a great law or regulation, but if you don't have the supervisory powers or resources to really follow it up, it ends up being a bit of a paper tiger, right? And so you really want to understand not only what are the laws and regulations, but then how are the supervisors working to put those into place and to enforce them. So first I wanted to show you here what the regulators said to us about these are their top concerns for the alternative finance industry. So it has to do with fraud, and it has to do with capital losses for investors, and misuse for criminal purposes such as money laundering. And here what we've done, and the next two slides will show you why this is more interesting here. They're reasonably aligned. So some of the regulators that we had responses from had direct remit for regulating a particular activity, right? And they might have remit for equity crowdfunding, but not have remit for peer-to-peer lending, for example. And so what you see here is the dark green is when a regulator has the remit and responding. So they should be more familiar with the activity. And the gray is where the regulator is giving their opinion, but they don't have direct remit for regulating that particular activity. So here's where regulators with remit perceive greater risks in general, and that's investor exposure to poor products. So the regulators that are really looking at what's going on day to day with this, that's one of their concerns. And inability to liquidate or realize investments is another area where the regulators who have remit are particularly concerned, more so than those who do not have remit. The ones that don't have remit are more concerned about issues of over-indebtedness. So it'd be interesting, we haven't had the chance to really do more of the kind of deep analysis of some of these really interesting data. It'd be interesting to see what's behind that. Why is it perceived to be more risky, on over-indebtedness before you're actually in the process of regulating this industry than after? Similarly, misuse of customer data. There's certainly, this is a data and technology-driven industry. Certainly something to be concerned of. It's interesting that seems to be more of a maybe concern beforehand, so not sure exactly why. And then just in the case in particular of ICOs, regulatory arbitrage was seen as more of a problem. I think it's kind of interesting actually that in general, regulatory arbitrage isn't seen as a particularly large problem by any of the regulators, given the fact that there is, often there are multiple remits or multiple regulators who may have some kind of remit over this activity. Here we asked about changes in staffing, and as you can see in particular, there's this is between 2017 and 2019. In equity crowdfunding, regulators responded that they were really staffing up. So we think that's quite an interesting piece of information, just how strongly the industry is trying to respond to the needs of regulation in this space. And we asked regulators, what are the impediments to you being an effective supervisor? And by far, as you can see, limited technical experience within the regulator was what they responded. So this is, really cutting edge activity a lot of times. It's not something that regulators would have seen if a regulator had been in commercial or, kind of banking or regular investment activity and then gone to the regulator. They wouldn't have been in this industry. There are probably not a lot of people the age of our previous panelists that have, already made kind of a shift from industry to regulation. So it is a real, it's a real need. Okay, so how do regulators make that, bridge that gap? So the next part of our survey looked at regulatory innovation. So what we see is that it's uncommon, but it's growing. And especially there are some pockets of greater activity in Latin America and in Africa in particular. So the three kinds of innovation that we were looking at, or technology-enabled activities, was one, an innovation office. And by this, what we meant was, is there a focal point in the regulator for firms, startups to come to and say, I'm thinking of doing this, would this be legal? Or how would I approach a particular situation? So some kind of light touch, which isn't, presenting a whole, kind of complete story to the regulator, but getting advice in a more informal way. And those have various, characteristics, but that's the idea. Then regulatory sandbox, that's a really more kind of detailed or more structured kind of approach where firms can come in and in a small, usually within a small number of customers, try out something with the regulator, kind of being very present in seeing what's going on. And then RegTech, SupTech is technology applications to facilitate either compliance by firms or supervision by the regulator. And what you can see is that there's currently about a quarter have either an innovation office or a regulatory sandbox. But under consideration, RegTech and SupTech are amongst the most highly sought after because regulators are seeing that they just can't deal with the quantity of data and information if they don't bring some technology to bear. And it's interesting that the Innovation Office, which is kind of a lighter touch, I mean, it could literally be kind of a phone and a desk and a knowledgeable staff member of the regulator, is more common in high income jurisdictions, whereas the more kind of resource-intensive activity of developing a sandbox is actually more common, although not in absolute terms, but in medium and low-income jurisdictions, and in places such as, for example, sub-Saharan Africa. And this is we asked how many firms have you helped through these different activities, and as you can see, it's kind of more than a 10 time, I think it's 12 times the difference between the regulatory sandbox, which again is a much more intensive kind of partnership between a firm and a regulator than in the case of the Innovation Office. So I'm going to just jump to this one and then go back. This is how these different innovations have helped with understanding key technologies. The Innovation Office, 92% said it had helped them. There was actually a lower percent with the sandbox. So these were kind of, to be honest, somewhat surprising results to us. We just think that this is a word of caution, especially for regulators who may be really resource constrained, that they should be thinking about maybe some of these lighter touch approaches, at least initially, such as the Innovation Office. And then in terms of RegTech, SupTech, machine learning and blockchain were amongst the most widely used technologies. Okay, so this is just the final couple of slides. So there's going to be a lot of regulation coming up, as we've seen, lots of change, so that they can take advantage of these opportunities. And this is what I showed earlier, what percent of these jurisdictions expect change. And this is the regulators, where are they getting help? Where are they getting this benchmarking? Where are they getting the support? So the orange is where they've received support in the past, and then where they would like to seek it. And as you can see, they're interested in support across the board by organizations such as the World Bank, international groups, by academic. The final one, I'm sorry, which says 61%, there's an error. It should say academic institutions, and then associations of regulators. And what's kind of interesting here is that the donors and the financial part is not what they're interested in as much as the technical support and the technical information. So with that, I know we started a little bit late. We're a little bit, I guess, behind schedule, but the information is on the Cambridge Center for Alternative Finance's website, on our open knowledge repository, and we certainly look forward to continuing this research and our partnership with the Securities Commission and the Malaysian government. So thank you very much.
Thank you, Margaret, for the presentation. We will now open to the floor to answer some questions. Is there anybody who would like to ask some questions to the World Bank team, who has conducted the survey that is actually that's actually received the most responses of a survey of its kind?
Thank you very much for your excellent presentation. On the ICOs, I have two questions. One is, how do you define what are ICOs? And in the countries that I think you seem to say they are regulated, which countries are they regulated, and are they regulated as securities?
So we were looking at tokens that could be regulated as securities. So we kind of restricted the definition a bit because it can be so broad. I could get into, if you'd like, maybe after the presentation, we could look kind of a little bit more in depth at which jurisdictions said that they were regulating. But as you saw in that one of the slides, in many instances, regulators responded that they could be regulated if they existed. So they hadn't yet had an ICO that had been issued, but they were foreseeing that there were types of ICOs that could be considered securities where they would then be covered under some existing legal or regulatory framework.
Thank you for your presentation. I just wanted to ask in terms of, there was a graph about Asia Pacific and Malaysia with the Malaysian flag tacked onto it.
Yeah.
I didn't quite get that bit. So does that mean that Malaysia is following the trend regionally, or does that mean that that is specific to Malaysia only, those results that you highlighted?
No, so this is based on, I believe it's 14 countries in Asia Pacific. So that's the percentages that you see is based on this grouping of about roughly 15 countries, and the Malaysian flag is in the segment of that where the Malaysian regulation sits. So like for peer-to-peer lending, that's regulated under an existing framework with adjustments and exemptions for this specific activity. So that was how that's meant to be interpreted. And as I mentioned, in Asia in general, the level of regulation is higher than the global average.
There's a question in the crowd there.
Hi, I'd just like to know in terms of the fundraising exercise, whether the other regulations.
Oh, there you go. Sorry.
The other regulators, whether they restrict in terms of the ability to fundraise, whether it's just for SMEs, MSMEs, or can it also be for the retail market?
So you're saying for equity crowdfunding or for?
Yeah, the fundraising activities, whether there's any restrictions in terms of the scope of fundraising that can be done on the platform.
So we did ask, for example, figure out which way to go, whether they could, I think it's this way. So the permissible activities, let's see. Oh, okay. Let's see, I need to go back this way. Well, I think they put it back to the other. Anyways, what we saw there is that there are some platforms where you can reach out to both individuals and to firms, but like is true in the case of Malaysia, fundraising on platforms here is limited to businesses, to enterprises. So in that sense, the rules differ varying by jurisdiction. I don't know if that's answering your question.
Where jurisdictions where they allow for the retail to access the platform, what's the purpose for it? Do you know?
You mean why would you not want an individual investor to be able to raise money, or,
Not the
or an individual fundraiser?
investors. Yeah, the fund persons accessing the platforms. What sort of fundraising activities are they looking at in terms of for the individuals, for example?
You mean where an individual would be raising funds on a platform? I mean, I think these are, decisions around risk management that different jurisdictions take into account, based on their understanding of the local market and maybe their risk appetite as they start to allow these types of activities to happen. It's always a balancing act because you want to, there's a real opportunity here, which we see for financial inclusion and for inclusiveness. And so at the same time, there are risks and they need to be, addressed. So I think that probably in some instances, these could be evolutions where, you see how things are working, where the regulator, observes what's happening under a particular regime, and then sometimes, different activities are maybe allowed, in the future. But there's obviously a large scope of different kinds of regulatory environments, different kinds of regulatory capacity. And so, we certainly don't think one size fits all, but we do think that there's a huge opportunity for learning across jurisdictions and starting to understand what are some emerging good practices. And that's a space where we're very keen to work with, the Securities Commission of Malaysia and other leaders in this field to really develop a more clear understanding of what would be, kind of some of those core good principles.
We have time for one more question from the floor, if there's any. Kindly raise your hand if you do have questions. Okay, if there is no more questions, that comes to the end of the launch of the report. Thank you very much, Margaret, and thank you for your active participation.
Thank you, everyone.
Can we please have Margaret to remain on stage, and we would like to invite Wei Min to be on stage for a photo. Can we also please get the SC team and also the World Bank team ready for a group photo together with Wei Min and Margaret? Please come up now. Thank you. So coming right next in this room, we will have Trading Digital Assets, Opportunities and Pitfalls panel discussion session. So please remain seated if you are interested in a final panel session. Kindly move forward as well to the room if you can. The next session will begin shortly. May I please invite you to move forward, come closer to the stage so that you can hear clearly. There's more seats in front. Ladies and gentlemen, we have now come to the final session for today, a panel discussion on trading digital assets, opportunities, and pitfalls. This session will discuss the overview of digital asset market, the risks involved in trading digital assets, and effort by the exchange operators to mitigate those risks. We have with us today representatives from the DEX operators, recently registered with the Securities Commission Malaysia. Kelvin Chua, the founder and managing director of Synergy Technologies, Aaron Tang, country manager from Luno Malaysia, and Hong Chi Yu, the chief executive officer of Tokenized Technology. And this panel session will be moderated by Bobby Ong, the co-founder of CoinGecko. CoinGecko is one of the largest crypto asset data aggregators in the world. And this session is Slido empowered, so remember to put in your questions through Slido. And now, please join me in welcoming our panelists.
Hi, thank you all for coming by here today. My name is Bobby, and with me today up here on stage, I have three exchange operators, Chi Yu from Tokenized Malaysia, Kelvin from Synergy, the Managing Director of Synergy, and also Aaron Tang, Country Manager of Luno. I think we have a session about an hour for today. It's about to talk about digital asset exchanges, cryptocurrencies and all. So I think before we give this session a go, maybe give you guys a chance to introduce yourself a little bit and about your exchange, and then we go straight to the questions after that.
Okay, we'll start first. My name is Xu. I'm from Tokenized Malaysia. We started quite a while back, 2 years ago, in Singapore. And last year, we spin off to Malaysia. And very fortunate, in June, we are one of the 3 exchanges that got the conditional approval. Thank you.
Hi, I'm Kelvin from Synergy Technologies. We are Penang-based crypto startup. There's 16 of us in a company. We started our business also 2+ years ago, and when we first started, we focused a lot on trading on different platforms to try to figure out which platform we wanted to build for the market. And my background specifically is actually in market making, so I do a lot of trading within the company.
Hi, my name is Aaron, and I'm country manager for Luno Malaysia. Luno's a London headquartered. We are in 40 countries around the world. We've been in Malaysia since 2016. We've had an interesting journey with lots of ups and downs, but really happy to be here on the panel today.
Indeed, I would say cryptocurrency as an asset class has evolved very much, and it's attracted a lot of billions of dollars into the market. So I guess first thing is congrats to all 3 of you. You guys received your provisional license earlier this year. I guess for many of us in the audience here, we have a question for all of you guys. I think the announcement came out sometime in April, I think, earlier this year. And it's been 6 months, half a year. And I guess the question is, when can we finally trade on one of these regulated, approved exchanges in Malaysia?
You can start trading on Luno as of today, I think. We are trying our best to go live by the end of November, hopefully first week of December. And I think for Tokenized also, it should be around the same time as well.
Yeah, thanks, Kelvin, for the shout out. So Luno, we've been granted full approval by the SC earlier this week. So, thank you, much appreciated. So what we're doing now is going live for our existing customers. Deposits should be enabled today. And then we look forward to getting new customers on board in the nearest time frame, which is, it might be next week, but definitely within this short period of time.
So yeah, I think I keep getting questions from people like, how do I buy Bitcoin in Malaysia? And then for longest period of time, I have to say like, this is like one of the hardest question to answer. But now I can finally say like, yeah, Luno is live. You can just buy on Luno, and soon Tokenized and Synergy as well. Okay, I guess let's go straight to the questions, opportunities and pitfalls in this cryptocurrency industry. So what do you think are the factors that move the digital assets market?
Personally, for me, I think there's obviously a lot of speculation. So you see a lot of people trying to speculate when the Bitcoin ETF news, whether it's going to be positive or not. And then more often than not, they get disappointed, and then the price doesn't obviously rally as hard. I think it's quite obvious to us that for now, we can't expect the retail market to drive the next round of adoption, right? Because a lot of them were burned when the market crashed. So from an institutional perspective, if you're managing your own funds, then I think you're more likely to trade crypto, right? Because you have controls over the funds, right? But for companies like sovereign wealth funds and all that, they don't really have an incentive to trade crypto right now because it's so volatile. And if you're on the wrong side of the market, you could be your job on the line, right?
I think it's hard to point down. A lot of people often ask us, what are the fundamentals of crypto? Do you do TA? Do you do FA? I think it's a little bit early. We have to remember that crypto market is only 10 years old. Bitcoin started 2009. So unlike the stock markets where we have 100, 200 years of history where we can chart and we can do all sorts of things, with crypto it's a little bit harder to correlate factors. That being said, I think fundamentally a lot of people believe that Bitcoin is a scarce asset, it's valuable, it has proven to be the best performing asset of the last decade. So a lot of people believe in the long-term properties of something like Bitcoin just based on utility and scarcity.
For me, just my 50 cents, I think this year the key event that a lot of industry players looking at is the ETF, the Bitcoin ETF. If this can be a success, I think there are trillions of dollars that will flow into this market. And Bitcoin market cap is looking around 100 billion at this juncture. So there is still a lot of space and upsides to grow. And another is more technical event. We call it halving, which start from next year, May. The Bitcoin rewards, it will be reduced to half. And I think it will create more motivating factors for still speculators or long-term investors to come into Bitcoin to invest.
So who's really investing in this market right now, and why do you think these guys are buying Bitcoin or Ethereum or XRP?
Well, I mean, the active traders that I know, they're mostly the young millennials, right? Early 20s, they have many bank accounts, right? And then what they're doing is they're just simply running basic arbitrage strategies, right? So they're just taking the liquidity from Europe and selling it in a place like Malaysia where the liquidity is a lot more scarce. And they earn good money. I mean, the average traders that I speak to, they earn about 70 basis points per trade, right? I mean, if you're looking at traditional finance right now, where I think Charles Schwab announced a month ago that they're dropping commission to zero, right? The margins in this side of the business is still quite healthy.
So from our end, we see, again, a bit similar to what Kelvin said, we see the millennials, but also some of the younger Gen X, so the 30-year-olds, the 40-year-olds. I think those who have disposable income, those who are willing to try something that's perhaps a little bit more high risk than your traditional markets. And I think this is driven because people are looking for higher yields because they may not be so confident that the stock market is going to do so well or the bond market is not going to do so well. So they're basically looking for a good performing asset, and for a lot of people, they're starting to experiment with Bitcoin.
Yep. So I think the key, if you look at the different asset class like equities or commodities, most of the asset class now, if you look at the chart, is at the peak right now. While Bitcoins, through the past 10 years, it keeps challenging the new high. So as an investor who are looking more alpha, and also, of course, millennials, they can more relate Bitcoin to the gaming because they start with, coins, reward coins, and traded all these instruments and also items, right? So this kind of Bitcoin trading is very able to relate a lot back to the millennial generations, and they are able to adopt this easily.
Do you see a lot of minor interest, so like homegrown miners operating in Malaysia and then looking to have natural sell side on your platforms?
Truthfully, not so much, but I think the bigger miners that I know, some of them are in Thailand, right? In Malaysia side, the miners that we've come across, actually, I think they're not as big, right? And some of them, you get a bit worried because, as you know, there's been cases reported where they are actually stealing electricity. And I somehow feel that for a lot of the miners, right, because we speak to some of the biggest miners in Thailand, and we've been trying to tell them that, look, why don't you pass us some of the Bitcoin, let us hedge it for you when the price is rallying. But the miners, I think, to them, they just believe that it's always going to keep going higher and higher. Right?
So we, again, same as Kelvin, we don't see a lot of huge miners. We know a few who come to our platform. But again, I think the vast majority of our customers are professionals, they are working people, they're not really like even full-time traders or anything like that.
On the contrary. Hello? Yeah. On our side, a bit different. I think since we got this conditional approval, there are few group of miners approach us. So I think they are looking platform in Malaysia to monetize their mining rewards. So it will be interesting to see a few months later. Yeah.
Talking about the sell side or buy side trading, we're talking a lot about young professionals, basically retail traders coming in. Do you see any institutional demand for crypto trading in Malaysia, or is this way too early, or they just don't have the mandate, or maybe instead of institutional, maybe family offices or some of these hedge funds in Malaysia, if there's any?
I mean, I've spoken to a few people where they have actually indicated interest, but I haven't actually seen them pull the trigger. The bigger traders that we have on our platform is actually those people with corporate account, right? And the reason why they use a corporate account is because when you're using a personal account to trade, there's usually a daily limit when it comes to withdrawal, right? So when you're using a corporate account, the limits are actually bigger. And some might be ICO companies who have raised a lot of money, right? But there's not that much of them in this market currently, right?
Honestly, I've seen a lot of interest from people who are exploring their own coins or their own token offerings. So there seems to be a lot of interest there. I think companies, they're speaking to us, they're like, we want to raise funding using digital tokens. We do see a lot of that. I understand that the regulations from the SC around this are coming soon, so we do look forward to that as well. Hopefully we'll all be involved in that.
Yeah, I think for previously, maybe there are not a lot of these kind of players is because they are not regulated exchanges. With this in place and with a better infra in place, I believe the confidence and also interest in family office and other fund institutional level will maybe be coming back soon. Yeah.
So just curious, like you mentioned, Kelvin, just now about the withdrawal limits, for retail and corporate. Just out of curiosity, what would be the withdrawal limits for your exchanges?
For us, I mean, when it comes, for us, it's about individual or corporate? Both. Individual withdrawal, I believe we kept it at 200,000-300,000 ringgit, right?
Per day, per month, or?
Per month.
Per month.
Per day is about 50,000. Actually, our limits are not, I think it's quite similar to Luno's as well. I think it's kind of like in a standard.
So I guess corporate will be a lot.
Corporate will be higher for sure, yeah.
Do you have such limits on tokenized, or?
Yeah, we have slightly lower on a daily basis, and our withdrawal is by on weekly.
We've got two levels on Luno. So when you first start a Luno account, you start with a level 2 account. So the limit for that is 10,000 ringgit a month. And then if you get close to that limit and you want to trade more, you can go for a level 3 account, which we require more KYC information. We do a bit more due diligence there. And then you can trade up to 300,000 ringgit a month. And then, yeah. Bobby.
Trade up to 300,000 in volume or in withdrawal?
Sorry. So deposits 300,000 ringgit a month. So it's capped on the ringgit side of the picture. You can trade as much as you want, but you can only put in 300,000 ringgit or withdraw 300,000 ringgit.
So just a quick question for you guys. Are you guys planning to reopen corporate accounts in the future?
That's a long-term plan. Referring to Kelvin's question, we currently open only to retail investors, only individual customers. For business accounts, just because we are relaunching, we want to take it cautious. We want to make sure everything is in line. And the reason for a little bit more difficult for business accounts is because you need a higher level, much higher level of due diligence. So it does take up a lot of time and effort to make sure. But this is in a longer term plan. Definitely we're looking at that.
So I think this answered a lot of questions that some of these guys who are looking to trade, like large traders and all, on the like limits per month actually. So let's talk about price premiums, right? I guess during the ICO boom or the crypto market boom back in late 2017, early 2018 in Korea, there's this thing called a kimchi premium where the BTC Korean won pricing pair was 50% above the BTC USD price in American exchanges. We at CoinGecko are quite interested to track this data. I would like to call it the durian premium in Malaysia. So I'm quite curious to hear. I guess, what do you think will be the durian premium when you guys operate in Malaysia?
Historically, for us, I think the nice term, durian premium, I think historically it was probably around 2 to 3%. So the price on Luno's exchange, if you convert it to USD, it's not going to be exactly the same as the price you Google, because there's the matter of, funds don't flow so freely. There's exchange rates and things like that. So the price on ringgit was always like 2 to 3% higher. A bit hard to predict, but if you ask me, I think it'll probably be around the same, yeah.
For us, I think probably close to 1% because we do market making within our own platform. So if the spreads were really good, 2-3%, then we'll just trade in and out, yeah.
For me, I'm a bit different view. I think as a trader, if I want to market make on the exchange, because as an exchange, we won't intervene the pricing. But as a traders who want to trade, we need to consider the forex risk. Ringgit currently is a bit on a downtrend against the US dollar. It can easily go to more than 3%. So maybe we're looking 3 to 5%. Yeah.
So if like,
what's your prediction, Bobby?
It's very hard to say as well. I think the durian premium, the premium that exists in every country is a function of the inefficiency of moving money, the fiat currency in and out of the current country. So the reason why Korea has a huge price premium at one point was because it was relatively hard to get money out of Korea due to some capital controls. Malaysia has some of these rules as well, so that's why.
A lot of the active traders, they use Hawala transfers. So the board rate don't really apply to them. So they can actually use money changer to move the funds out. And the rates are actually very competitive.
But I also think sometimes we need to see the bull run, because I think kimchi premium happened when the Bitcoin run from 10,000 to 20,000 range. So if that happened in Malaysia, when you see a 20, 30,000 ringgit kind of jump, I believe the durian premium can easily more than 10%.
Yeah. So I guess it's a matter of timing as well, like when it happens. And off my head, I would say that a fair premium to pay in Malaysia for buying Bitcoin in Malaysia relative to buying Bitcoin outside Malaysia would be about 2 to 3%, nothing more than that. Anything more than that would be, I would say, too high. But that being said, I foresee there could be a possibility that because of the withdrawal limits that you guys have in place, during periods of high demand, there may be a situation where there is not enough supply coming into the market, or market makers were not as efficient, and this may drive up the premium a lot higher. Just of my thinking, but I would say around 2 to 3%. I don't have any data. I'm waiting for these guys to operate, and then we can track the prices that these guys charge relative and compare.
Come in and do some arbitrage.
And then compare it against what Coinbase, Gemini, and Kraken is charging in the US and see.
Bobby, because you are an aggregator platform, right? Like compare, US and also country like Japan, Korea. How's the premium look like, or even Singapore?
We haven't really been doing it yet, but we're just waiting. It's one of the features that we plan to add in the next couple of months or so. So we plan to track like the durian premium, for example, in Malaysia, the kimchi premium in Korea, and then the sushi premium in Japan, and a bunch of other premiums as well. It'll be quite interesting to see how the price differential is for each country, and also to see this across a period of time. During periods of high volatility, do we see the price premium increase or decrease, or does it even go negative in the sense, like will it be a case where it would be cheaper to buy Bitcoin in Malaysia relative to buying in the US?
It does go reverse arbitrage, right? Because if you think about it, the majority liquidity pools are all outside, right? So if let's say, assuming Malaysia is here, Europe's here, right? And the price drops sharply in Europe, Malaysia will take time to catch up to it. So if the price rises sharply, then the Malaysian side will take time to catch up to it. So it does go reverse arbitrage. Yeah.
Yeah, and I think it's something that we've observed as well. I don't have numbers off my head. We haven't tracked them, but like based on, so like Korea used to trade at one point at a 50% premium, and I think middle this year, it's turned on to negative premium. So it's actually cheaper to buy Bitcoin in Korea now. I can't remember if it's now, but compared to what it was than buying in the US. So this was a complete reversal of the trend that we observed like from 1.5 years ago.
Interesting.
Yeah. Let's see what some of the questions that we have. Let's talk about risk. So as an investor, want to trade cryptocurrencies, what do you think are the risks that these investors should be aware before they even get involved in this space?
Don't know why you got, okay. You looking at me, okay, I answer. Okay. So I think crypto it's a new thing, right? I think the first thing that investors should know that it comes with risk. There's no free lunch in the world. You want everyone wants high returns, but low risk. Doesn't happen, right? If you want high returns, you have to be prepared to look at some level of risk. So I think, broadly speaking, I think there's a few that I can think of. First of all is kind of the education knowledge kind of thing, because crypto is not an easy thing to get into. I mean, it's new, it's not easy. So you kind of need to do some background research, some reading, some self-study before you get your hands into it. The other way of doing that is, of course, maybe you try with a small amount of money. You can start with, say, 3 ringgit, just to understand the workings of the system. So I think that's perhaps the big risk. But more than that, what we often see on our system, not just on the education, but it's very, very simple things like doing 2FA for your app, or not leaving your password written around, because we see a lot of these sort of bad habits, and a lot of people actually do this. And unfortunately, if that happens, hackers can access your account. You'll probably get scammed, or you'll probably get robbed. And yeah, maybe you guys can elaborate more on the other risks.
For me, because like I said, when we first started, we did a lot of trading, right? So we were trading on peer-to-peer trading platforms. In fact, the first version of our platform actually looked more P2P-ish. So while we were trading on local Bitcoins and we were trading on Remitano, what we encountered was a lot of scams, such as man-in-the-middle kind of scam, third-party withdrawals, third-party deposits, and which is why we decided that it is actually better to build a centralized exchange model, right? So platform risk also, there are fake trading platforms out there. So if you have to trade, it's better to trade on, regulated platforms. At least, we report to regulators.
Yeah. I think maybe I will repeat again. I totally agree. All the investors should somehow adopt portfolio risk management. The comfortable threshold for your investment, you should only allocate like 5%, the threshold that's comfortable, and try to capitalize on the upside potential. Aside of that, I think another key thing to take note is also the liquidity risk. Because a lot of people will say like, why Bitcoin, or why not this token? This token can go up 10,000% and so on. But there is no point if this token can jump so high, but you cannot liquidate the next day, and you cannot sell off this token. So I think on the liquidity risk, it will be a key factor for the investor to look upon too.
So touching on the point that Aaron brought up just now about saying if you have an account, you have some funds in there, but there's no 2FA, and then someday you lost your password, and then someone access and withdraw the Bitcoin in there. So do you guys have any insurance policies in place that protects users if they don't have 2FA? Or what if they have 2FA and they still manage to get hacked? Like, I think Coinbase, if I remember correctly, there's some insurance, but yeah, just want to hear if you have any insurance in place for the users. Yeah.
I think there's 1 or 2 exchanges in the world who have insurance. I think for a while, CoinHeco advertised that they also had when they were still active in Malaysia. Currently, we are looking into that. we have not finalized any form of insurance, but I will say that when we submitted our application to the SC, they are very stringent with our security level. So we need to have the hot wallet, we need to have the cold wallet, and then any additional security measures. The SC takes this very seriously. So while we don't have that insurance policy in place yet, something we're looking at, but I think for now we are self-managing the risk with our multi-layer security.
Yeah, similar to what Aaron just said, we have a cold wallet and a hot wallet. So what's at risk is actually what's in a hot wallet, right? So our plan is to, over time, move majority of the funds, hopefully similar to the big exchanges where we can keep 98% of the cold storage offline. And then for the 2% that's on the hot wallet, which is susceptible to hacking, then I think even if we were to get a quote for an insurance to cover it, the premium, even being high, would still be more affordable.
We have custody in place, so we have insurance up to 100 million. But having said that, for 2FA, if due to user carelessness or never upkeep the security, it's not under insured. So, but aside of 2FA, we also have email verification. So if hacker can sort of hack your 2FA, they still need to hack your email. So we have few layers of security to ensure the digital asset that our customer have will be secure.
Yeah. And I think in Malaysia, one other risk that a lot of people don't realize is the financial literacy is actually quite low. And I've encountered like countless number of times people who kind of make use of the MLM schemes, who make use of Bitcoin and blockchain technology, trying to disguise it as a new way of making money. No doubt, if you do it a legit way, it's quite a good way to make money. But for many of these things, it's actually quite hard for this. They just it's a scheme to try to get money off people's pocket and all.
So I think we will need CoinGecko help for education. We just have a sessions that we want to have a joint event with CoinGecko for them to promote education. I think if you check on CoinGecko, just to do a bit of marketing for them, they do a lot of quarterly report, and all these are very useful educational material for crypto investors.
Likewise, I think the SC in our approval process, they do make us declare what's our education and awareness programs. So I think we will probably collaborate on some of this to help educate people. But maybe a word of, I guess, personal advice to anyone who's interested to try and explore crypto. I would say you actually almost have to have a bit of skin in the game to motivate yourself to learn, because it's one thing to read a blog or to listen to a lecture, but without having that 2-3 ringgit inside an actual wallet, you don't care so much to read up and learn about it. So if there's a bit of personal advice I can give is, if you're interested, you're curious, you can sign up and just try with a 2-3 ringgit. Not a hard sell, but just some friendly words of advice here.
Actually, I completely agree with Aaron. And when I first found out about Bitcoin, it was 2013 back then, 6 years ago. It's pretty complex, arcane stuff. I read a white paper. I mean, it sounds plausible, sounds logical and all. But to really understand this whole concept, the only way to really understand it was to put some money in, get it, and then move it around, and then you really find out all the ways how to secure your wallet, store them safely, and then all those other security measures. Because if you don't do them properly, like, just expect to be hacked, I would say. Yeah. I guess next question on risk is like, how do you guys handle AML, KYC, the KYC rules? How do your exchange comply with KYC rules, AML, CFT rules, and all the other kind of regulations? So I'm sure you guys have a lot on your plate right now.
Well, I mean, since we've been conditionally approved, obviously the cost of doing business has gone higher. So right now we actually outsource quite a lot of these features. So I believe for eKYC, we are looking at a company called Jumio. And for negative news search, we're engaging a Singapore company that does a real-time checking. And obviously, there's John Sidoli, my colleague, who's double-hatted as a compliance officer. And he monitors the deposit withdrawals and suggests limits to us when it comes to enhanced due diligence.
Yeah, likewise, we use a combination of in-house systems. We also use some third-party applications. Some of you have probably heard of Chainalysis, Elliptic, Onfido. Onfido were giving a talk, I think, here today or yesterday, or today or tomorrow. And then we use Thomson Reuters. So there's a lot of actually solutions in the market that we can use. But I guess more broadly speaking, Bank Negara actually has quite a stringent document on what you need to do, what are the minimum requirement standards. So I guess we just need to comply to that. I mean, the cost of business goes up, but we have to comply.
For tokenized, I mean, since day one, we operate a bit differently. We put all the KYC tools in place already. Just to highlight, we also developed the KYC with our own proprietary. So let's say the Malaysia residents' documents are stored on our so-called storage instead of third party and etc. Of course, we are also partners with WorldCheck, Ofindo, and other institutional grade eKYC. Yeah.
So I guess another question that I'm quite interested to know, and I guess to any other crypto traders, is regards to taxes. So in Malaysia, there's there's zero capital gains tax. But if I buy and sell crypto, like, are we also on zero capital gains taxes, or how should we declare any taxes?
Personally, for me, I think the closest way you can look at it is capital gain tax-free, yes, if you're holding long-term. And for me, the closest, I would say anything above 6 months, because that's, I would just refer to the US standard. But if you're trading actively on a daily basis, then I believe you actually have to pay, because it's considered like a profession, right?
I believe the principle is, again, similar to what Kelvin said. Are you trading it as an investor? Like, are you investing, buying and selling? Or are you trading it for daily income? And I believe probably, again, the LHDA and IRB needs to give further clarity on this. But I believe if you're doing it for your personal income, additional source of income, then you should declare and pay taxes as a responsible citizen.
Okay, so I'm going to go to the Slido. I guess there's been quite a lot of questions. So I'm going to choose this. Do you guys have any plans to offer margin, number one? And do you guys plan to have any derivatives on your exchange?
I'll let Luno start first.
I don't think we have any plans. I cannot recall it in any of our roadmaps right now. I'm not sure what the SC's position is on a new asset like crypto and then offering margin. I suspect the SC also wants us to be pretty cautious when we roll out something new like this. So it's definitely not on our roadmap, but who knows, when the industry matures, maybe 5 years' time, maybe we'll look at that, but definitely not for now.
I think, yeah, for us, pretty much also not for now, but we definitely very keen. We sort of already have the system in place, but we are waiting for regulation to be clear and launch it.
Yeah, I mean, truthfully, for us, there's quite a lot of futures trading platforms out there right now, and they all offer very good referral. So I think for us, we might instead just work with a platform and earn a referral fee instead.
That's quite an interesting way to think about it. I guess, especially when it comes to margin and derivative exchange, I guess this is one area which I think the regulator's role is very important. If you look at the international margin players and all, some of these guys like BitMEX are offering 100x leverage, which I think is ridiculous. Why do you even need 100x? It's quite irresponsible, because you just lose. It's a very high chance of losing all your money. And then lately, just last week, Binance Futures announced they're making 125x leverage. It's like an arms race. Everyone's trying to go up, compete against each other and offer more leverage to users. It's not a good development for the industry. It just leads to more and more people getting wrecked in crypto terms or losing money.
Yeah, I think I totally agree with Bobby. I think a lot of people misunderstand derivatives, like how the current industry structure is that they want us to gamble. But the reason that when you gamble, you lose your edge, and that's it, you lose your capital. The derivative, the real instrument should be let fund manager or certain sophisticated traders to hedge it. That should be the key purpose, but I think it's a bit misused right now in the industry.
Yeah, I think if you look at Japan, like the regulators there, Bitflyer used to offer, if I remember correctly, 25x leverage, and the regulators there have kind of said that they should just tone it down to 4x leverage now. So that's quite a big development, I would say. And I would say 4x is, yeah, reasonable. Anything more than 10 is, I would say, why would you need more than 10x leverage unless you're gambling?
But having said that, I think for certain instruments like Forex, it will make a lot of sense because the volatility is not as great as crypto. Crypto at this juncture, to be honest, for the new adopters, I don't think leverage should be the tools that you are looking at right now. You should be holding positions instead of try to leverage your position.
Trying to find a question. Yeah, here. Someone talking about Forex, actually. Someone did ask a question on Forex. So would you recommend trading crypto or Forex, and what's your rationale in terms of profit?
I think for me, because I started with Forex, trading Forex first as a retail, it's very challenging. I actually, faced my margin call on my first month when I trade Forex. But for crypto-wise, let's say Bitcoin, if you hold positions, let's say you bought now around $8,000 US, the worst it can go is zero. You won't need to, you won't need to lose. So you don't need to face the situation like margin call. You have to top up capital. Your position is being wiped out. I think these are the upside compared to the forex trading, which is much more challenging.
Definitely crypto, because the margins are there, and I think we were actively trading on Luno, and the returns are very, very interesting. You don't really need to understand fundamentals, right? Like if you're trading Forex, then, macroeconomics policy, if you don't understand, it could have adverse effect on your position, right? When it comes to crypto, you can just use the very basic strategy. If you're worried about your exposure, you just take 1x leverage and hedge out your position on BitMEX.
I guess I would approach this question from the investor perspective. I'm not a trader myself. Actually, it's funny, I work for a crypto exchange, but in my daily investments, I'm actually quite conservative. Of course, I got some crypto, but like Chiyu mentioned earlier, you can manage that risk by, say, allocating a small amount. I think trading especially day trading, is a sophisticated person's game. And perhaps you are of that level, of that capabilities, but I think for the majority of people, buy and hold might actually be a better strategy long term.
Yeah, I like that idea. I mean, people ask me like, when's a good time to buy? I always tell them like, you should dollar cost average your entry into Bitcoin. Like, I don't know when the price will go up, when it will go down. People think I have an oracle. I can tell because I run CoinGecko. I can tell the price whether it's going up or not. I can't. I just don't know. I make predictions about the future, but at the start of the year, I predicted the price will go down. But I didn't expect the price to go up in Q2 and Q3. The only way to really know is to just first decide what percentage of a portfolio that you're comfortable with, and then after that, then you dollar cost your entry into Bitcoin, and then you probably build a sizable portion over a period of time. Next question over here from Slido is on trading fees. So actually the question is, how would each of your trading fees affect liquidity? But I guess before we get that, I guess I'm quite curious, like what are your trading fees on your platforms? And maybe you can tell us a little bit more about that.
We have 50 basis points on the taker side, but then we have a trading rebate. So essentially we charge 50 basis points for taker, and then we rebate negative 0.25 for maker. So if you're taker of liquidity, you get charged 0.5%, and then the maker of liquidity actually earns 0.25%. Yeah.
We have a few tierings for membership, and also we might take their trading volumes into consideration. So our trading fee can vary from 1% to as low as 10 basis points, 0.1%.
1% to 0.1 to 1%.
Yeah,
trading
correct.
Fee. Okay.
Yeah.
So Luno also has a maker-taker fee. Maker fee is 0%, means if you're a liquidity provider, there's no fee for you to trade. But if you are taking the liquidity off the market, then you maybe charge anywhere from I guess 0.5, 0.75, or 1%, depending on the volume that you have traded.
So from the sounds of it, like seems like Synergy is going to be like the most competitive one. If you're a big market maker, you're going to get negative 0.25% rebate from the sound of it relative to the rest, which is 0.1 and 0% maker fee. But I'm also going further deep into you guys. So like, I mean, an exchange it sounds very sexy business to run, but it's actually a very competitive business as well. So I mean, essentially, from a user's point of view, is we just want to have Bitcoin, and it doesn't really matter where I buy it from, right? Whether I buy it from A, B, or C. So I guess maybe what differentiates like Luno from Synergy and Tokenize, and how do you plan to go out in the market, I guess?
I'll be frank, we are a fiat to crypto exchange, right? I think where things will get interesting, like what Aaron was saying, is the framework for securities token offering, and you know, being able to digitize securities, offering it to, you know, raising capital for a small, medium enterprise company. That's where I feel things will get exciting, right? I mean, if you look at it purely from Bitcoin trading, then it's, you know, it's not that big, you know.
We look at it in two ways. We almost, I mean, we have one app, we have one exchange, but we almost see that the market is sort of segmenting into two separate segments, and one is the consumer app. It's almost the e-wallet kind of market, you know. People want fast, people want easy, people want it to be simple to use, and I think that's what we want to do for our app. We also have the exchange side of things, which is perhaps for sophisticated traders. So we want to give them the best user experience, the best tools, and that's kind of how we would approach this problem. But back to Calvin's point, I think a lot of people fail to understand how difficult it is to run a fiat to crypto operation that is regulated and in compliance with the government regulations. It's actually an incredibly difficult thing to do. So I guess, you know, there's enough space for all of us in the market. I'm just saying that it's not that we are competing to drive the margin down to 0.1% and kill each other, because the difficulty of the challenge is so huge that those people who manage to do this and to do it in a responsible and safe way will always be having business in the market.
Yeah, I think a lot of things come to educations, and the whole tractions, especially on non-crypto audience, right? I think is as high as 98%. Means that among Southeast Asia, most of the country, there's only 2% they are considered crypto investors. So there are still a huge market that we can convert. And to be honest, like back in Singapore, you know, we have 20 plus exchanges, but we don't even need to compete, because most of them, in the end, they have to shut down because they don't have bank account. So I think it's more of how we can work together to make the industry big, rather, you know, yeah.
Yeah, I mean, I agree. I mean, the industry is still so small that, I mean, the key thing is really growing the pie and everybody benefiting at the same time.
Yeah, exactly. I mean, as long as the asset class wins, right, we all win. Right?
Yep. So, talking about liquidity in this market, like one of the questions here is, I mean, I really doubt that there's sufficient liquidity in the Bitcoin market in Malaysia. How do we plan to, do you guys plan to source liquidity from overseas, or get it from miners to source the supply, or just kind of let the market develop naturally through market makers, or yeah?
So for Luno, I mean, many years ago we started, of course, we had a market maker, but we actually seen a huge and healthy growth in the Malaysian market. I think back in 2017, we used to see volumes like, it could even reach like 1,000 Bitcoin a day of trading. So in terms of liquidity, we believe that the Malaysian market is hungry for crypto. We think it's only going to grow. So at this point of time, we're not like actively looking for market makers. We think the market is big enough to grow by itself.
For us, I think, in Luno's case, I think it's because they were the pioneer in the market. So obviously they have a lot of users, right? For us, we definitely do plan to do market making, and we do take liquidity from the main exchanges, which, you know, the Krakens of the world, the Bitstamps of the world. So we do actually market make the liquidity back to the Malaysian market. And as per our interview with Securities Commission, because if we are operating the market and you are doing market making, then there is a conflict of interest, right? So we're actually now working we've actually completed the trading bot to do the market making in an automated manner so that there won't be any human intervention.
We have a few market makers partners so far, so most likely they will onboard to our Malaysia end and facilitate on the liquidity side.
It's about 15 minutes more to go. I mean, if any of you who wants to ask question and can't reach out Slido, you can raise your hand and we can send a mic over to you. So yeah, can someone send a mic to Raj? Somewhere, excuse me?
Excuse me, there, yeah.
Thank you for that. It was pretty informative. I just have a question for all three of you. It looks like, despite pressure from the Federal Reserve Bank, with PayPal and Visa and MasterCard unplugging from Facebook's Libra association, it still looks like Zuckerberg will launch the Libra crypto coin in the middle of next year. In that regard, I have two questions. One, what is your view of the impact of such a coin on Bitcoin, given that Facebook has 2.2 billion users, and even a small portion of that is a big number? And number two, do you have any plans to provide liquidity for Libra for Malaysians?
Can I say if Libra is coming to Malaysia, we are the only platform that recognize they're only able to host it. Yeah. So
I think if Libra comes to Malaysia, I think none of you guys can support because at this point in time, you can only support Bitcoin, Ethereum, and XRP, right? So yeah. Libra has to be approved by Securities Commission before these guys can trade them. So at the moment, no, but in the future, maybe. You guys got an opinion on the other question? I have an opinion. I can answer that.
My opinion is that Libra is good for the crypto industry. It's good for Bitcoin as a whole because, like it or not, Bitcoin and crypto has developed a bad reputation over the years. I mean, if we're being honest. But when Facebook comes into the game, no doubt Facebook reputation also not that good lah. But at least Facebook coming into game sort of lends more legitimacy for a lot of people from the consumer side of things, right? Now people are taking notice. They're like, oh, Facebook is also thinking about cryptocurrency. So I think that is good in terms of adoption of cryptocurrency worldwide. People will get used to the idea of digital tokens. People get used to the idea of peer-to-peer money transfers. So I think that's good for the industry. As to the second question, I mean, if Facebook coin does launch, I mean, I'm sure all of us would be interested to speak to the SC and say, can we start talking about listing it? Because it's definitely something we see as positive.
Yeah, I think for me, I see Libra coin and also Bitcoin a bit different because if you check the fundamental of Libra, it's backed by a few basket of currency. So it's more, they actually want to be a cryptocurrency kind of crypto. But Bitcoin currently is more a storage of value and they are more speculation assets. So I see this as a two product. But will Libra help Bitcoin? My answer is I'm very bullish on that because currently crypto community, I think we are looking around 50 million users only. I'm not sure the stats, but please correct me if someone knows the right number. But Facebook now they have 2 billion users. So this actually accelerate the whole crypto games, the crypto landscape, and widen the whole vertical. So I definitely see this as a good thing for crypto community.
Yeah, actually, my point of view is actually Chiu said everything. I mean, Libra essentially is a wrapper for fiat currency. Instead of wrapping USD, it wraps USD, Japanese yen, British pounds, and Singapore dollars, and it's just a proportionate basket of coins. It's not really the same purpose. I guess Facebook's main aim of launching Libra is as a payment channel, payment method to compete against WeChat's WeChat Pay, and they want a payment system that works for the rest of the world. And whereas Bitcoin's main utility is, I would say, storage of value, and Facebook Libra will be more payments, transfers and all. I think Facebook's Libra, if it does launch, that's a big if. it's actually very beneficial because it would provide a lot of publicity and be a massive on-ramp for the mass market to get into. Once you have Libra, it's trivial to convert the Libra token into a Bitcoin, and then it will be a big bull run to Bitcoin. Massive on-ramp for cryptocurrencies, I would say. So anyone's got questions, you can raise your hands. Yep, you can send the mic over here to this lady in front.
Hi, just a question. I'm just wondering, right, because I think Aaron mentioned earlier, it's actually quite hard to get into cryptocurrency investing. And there's a lot of mumbo-jumbo jargons. First, you have to learn about blockchain, then you have to learn about what hard fork is, how the calculation, what kind of calculations are going on and whatever. So I'm just wondering, do you see an increase of demand and participation among Malaysians to begin with? I mean, even if there's approval or no approval, it doesn't necessarily translate to an increased amount of cryptocurrency investors here in Malaysia. So do you really see an increase in interest among Malaysians to start investing in cryptocurrency? And I understand that you guys will have to do some sort of education exercises as well. When is it going to happen, and in what form would it take?
Obviously, the education part is important. I mean, I come from Penang, and Penang is known to be a hotspot for JJPTR, money games. I think there was one company recently that was in the news, and they had like 26 different tokens. So education, I would say, is 60% of our marketing initiative. Just now when we had that short discussion, I think our plan is to actually maybe have like small food trucks, looking truck that we can use and go into different cities and all that and start to educate people. The adoption, I think, will happen naturally. I was talking to David from Luno on Saturday, and he said because he travels in the region a lot, and less than 1% to 2%. So obviously there's a lot of room for growth. Maybe what it takes is the next stock market collapse to happen, and then crypto as an asset class maintains its value, and then people will start to take it seriously.
I'm going to add on. I think in terms of education, it's no different from the stock market, right? If you think about, if you want to invest in the stock market, then why is, for example, you come in and why is AirAsia worth the price it is at this point in time? Why is Sime Darby Berhad worth the price it is at this point in time? And there's a bunch of ratio, right? A bunch of valuation metrics, free cash flow, PE ratio, and all these other mumbo jumbo as well, which you can say for the stock market. And people have to educate themselves. If you want to trade profitably, you have to learn. If you don't know, you're basically almost gambling in this market. And that's it. And I think adding on to Kelvin's point of view, if you think about it, the crypto market is actually really small, and the potential opportunity for growth is really high. Obviously, I'm bullish, I'm biased. But the point is, if you think about the future where the young people don't trade stocks anymore, but they choose to trade crypto assets, I guess as these guys grow older and they gain more money in the future, like the potential for them to invest more in the crypto assets will grow significantly more. And there's a lot of opportunities for growth. That's my point of view.
Yeah. And I think recently someone just asked me, the differentiation between Bitcoin and gold. But I like to compare Bitcoin with the earlier days of Google, the Amazons. So like now you really cannot see, before 2000, if I told you you can actually buy books online, you would think that I'm crazy. The bookstore, it's just so many shops along the street. Why I have to go to the internet to buy books? But 20 years later, we cannot live without Amazon. We cannot live without Google's. So yeah, take it as early days of the investment for this kind of unicorns. Yep.
There are also a lot of data points that seem to be pointing that younger generation, for some reason, for whatever reason, they actually quite open and they quite like the concept of Bitcoin and cryptocurrencies. Again, maybe going back to Chiyu's point, they're used to gaming, they're used to tokens, electronic stuff, digital. I imagine for them, maybe they look at stock market as a bit strange, or they even look like traditional assets like a little bit strange, and they're somehow more comfortable. We may not know exactly why, but we can see that the demographics are very clear that younger investors are really very open to this kind of new forms of investment. So it's not to say just our opinion, but I think it's backed by a lot of data and research as well.
Okay, we have 7 minutes to go. Maybe time for 2 questions. Gentleman at the back. Yep.
Hi guys. Just one. Comparisons are often drawn between gold and Bitcoin. What makes Bitcoin superior to gold?
Yeah, back to my statement just now. So for gold, to be honest, if I would like to ask you what is the maximum supply of gold, I think it's very hard for any one of us to tell us the number. The maximum we can share is maybe the market cap based on the circulation supply times the last price. So that's all. But for Bitcoin, everything is very transparent. You know how many units are there circulating in the market, and maximum how many Bitcoins only available to the market. So on the scarcity and also on the data points, everything is providing to you. So for that, scarcity plus also the portability, like gold, how many of us now we actually exposed to gold? Anyone have gold right now, or invest to gold? Yeah, so I think that's the downside. But at least on the Bitcoin, you can have 4 of us, at least we have exposure already. So I think that's a good stats, right? So, yeah.
I mean, Chiu mentioned a bit about the portability. So the portability and transparency, like we know exactly, I mean, sort of Bitcoin is stored on the blockchain ledger. Even if you lose your key, if you have a backup somewhere, you can always retain ownership. Whereas it's a little bit hard if you have that 1 kg of gold to bring it around or to store it. There's a lot of security concerns. There's a lot of portability concerns. And perhaps today, Bitcoin isn't used very much as a payment method, but we do foresee with other solutions coming in, Bitcoin may one day be used to make payment, whereas I think it would be a bit far-fetched to say that gold will be used to make small payments one day, because gold is actually a reserve currency.
On the portability part, I mean, I know this is a bit cliche, but if one day men do go to the moon and live there, obviously we're not going to carry gold bars there, right?
So yeah, I think a lot of people compare Bitcoin as like the new form of digital gold, digital version of gold, I guess. I think 2 things are clear. Like, we know for a fact that there will only be a maximum of 21 million coins, nothing more, nothing less. So that the number is fixed. We know it's a fixed supply. I guess second part is very, you don't have storage costs, or the storage cost is relatively low when you hold Bitcoin compared to gold. You have voting costs for gold and all. And then portable, these guys brought up a lot of these points. You can't really move gold around the world. It's not that simple. You can't carry 1 kilogram of gold bar to the airport and bring it across to the next country. Whereas in Bitcoin, technically, nobody really knows. It lives online. Not so legal, but and then also the part is it's divisibility. You cannot really divide gold. Like, I mean, I guess you can, small part, but it's relatively hard. Whereas Bitcoin is very easily divisible to 8 decimal points. Of course, Bitcoin is unique. If you look at the other crypto assets that these guys are allowed to trade, XRP and Ethereum, they don't technically show a lot of similar qualities as Bitcoin. Ethereum, for example, has no fixed supply. Its supply goes to infinite, so it doesn't really display properties of gold with a fixed supply. XRP has $1 billion in supply, but it's created out of thin air by this company called Ripple Labs, and it's then distributed worldwide. So yeah, it's not although there are 5,000 over digital assets, not every single one is the same as gold. I guess Bitcoin is the only one that has the closest comparison to gold. Okay, time for one last question. Gentleman in the front, yeah.
Hi, yeah, I just want to ask whether any of the exchanges will have a physical presence, like, for example, an office that a customer can actually walk in and, open an account, do AML, KYC, and also withdraw possibly cash. And also, do you foresee that any one of you would establish a network of Bitcoin ATMs?
I'll answer the question about the physical sort of store, or maybe even like a physical service center, like maybe a Maxis service center. We are looking at the idea, but there are some security concerns, as in we probably won't get into the Bitcoin ATM kind of thing, because I think there's physical risk to someone walking into your store and then like exchanging money and taking a bundle of cash out. So I do think we will lean more on the virtual solutions, but I do see a lot of value in like allowing face-to-face conversations for KYC, customer support. So definitely something we're looking at there.
No plans for cash deposits or withdrawals. So ATM, also, to be honest, no plans for that.
Yeah, not in our roadmap yet, but we are open to see all the opportunities ahead. We might have some exhibitions in futures that will support on-spot KYC and also onboarding, but when we launch lah.
All right. I guess that's all the time we have today. So thank you very much, Aaron, Kelvin,
Thank
and
you.
Chiu.
Thank you, Bobby.
Thank you, everyone.
Thank you.
Ladies and gentlemen, that concludes the panel discussion on trading digital assets with Bobby, Kelvin, Aaron, and Chi. Thank you very much for being here with us. I hope you enjoyed today's program. Have a safe trip home and see you tomorrow.